Good evening. Good evening, ICI Dubai. I miss you all. I miss standing here and saying good evening. I miss your smiling faces. I missed interacting with you all. And today, when I stand here and say good evening, I am feeling good about it. Last month, I was on a holiday, and whenever there was an event, many of you pinged me and let me know that I was getting missed. I felt so blessed that you took out time from your busy schedule, from your calendar, and let me know about it. Thank you. And that is the reason I love ICI Dubai. I love you all. Thank you all. Thank you to each and every one of you from bottom of my heart. And now it's time to start our event. Welcome our dignitaries, elite speakers of the day, my heroes, my past chairman, regional director of Middle East and Africa, and all my seniors and fellow members. Welcome to one more event of ICI Dubai. And this event is special because we are continuing our celebration of CA Day, our CA Day, which falls on 1st July every year, and the day this time we entered the 75th year. Give a round of applause for yourself for entering the 75th year of CA Day celebration. Will you all say with me, Happy CA Day! Belated Happy CA Day to all. Feel proud, feel blessed, because this is the day which gave us our identity. Our parents gave us life. Our teachers helped us in education, but ICI gave us our identity. It gives me immense confidence, the boldness to go out and get myself a life, a livelihood, a reason to stand here today among you all, the learned and elite members. I owe it to ICI and feel proud to be CA. Happy CA Day to each and every one of the member of ICI Dubai chapter. Before we move further into the session, it's time to pay the respect. Respect to the country which welcomed us, which gave us the opportunity to grow. The name which makes our heart go like dhak dhak, dhak dhak. It's time for national anthem of UAE and India, followed by ICI motto. I will request all to rise from their seats for national anthem and ICI motto, please.
मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उज्जल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगल य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you all. Please take your seats. How many? And others who are standing at the back, please come and take your seats where there are ample seats available. How many of you remember progress reports? Those subjects-wise scores and marks, parent-teacher meeting, class teacher sitting with the pile of progress reports and we walking with our parent with hope that teacher remain kind to us and in good mood when talking to my parent. Sometimes we hated those days of progress reports, but I feel those progress reports were important and it helped us in shaping us by reviewing how we perform on regular basis. On CA day, first quarter of new committee gets over. We have completed 3 months of this new committee and here is our progress report. This report will help us, we as managing committee and you as member, to know our strength and areas where we need improvement. So here we go. In the first quarter, what we have done is, we have completed 6 events. Total, you can see we have done 6 main events, 6 general events. We started off on 2nd of April with Bridging the Gap, Health and Wellness. Bridging the Gap, Health and Wellness on 2nd of April. This was followed again, one more event in April, Code of Ethics, Professional Conduct and AML. Then we went on to do tax talk on corporate tax and transfer pricing because corporate tax is a hot cake. So we did one event on corporate tax in the month of May. Followed by, we did emerging standards on auditing. Auditing is core to us as chartered accountants. So we did one event on what exactly the trends which are emerging in auditing. That was followed by another event on corporate tax. Clarifications on qualifying free zones came in, and that is why we did 1 sessions, which was your questions, our expert answers, and it was well received by all of you. Thank you for that. And then again, we did corporate tax because corporate tax is the up game right now, corporate tax and beyond. So if you see, we have done 6 events, 2 events each month. Out of these 3 events were on taxes. 1 event we did on auditing, which is also our core for chartered accountants. 1 ethics, which is very close to us, close to the heart. We have to follow the ethics. So we did 1 session on ethics and one session on motivation on your health, because if health is not there, everything is a waste. So we did 6 sessions, 2 sessions per month. That was main event. That was not it. Beyond main event, what we do is we do some kind of workshops, and 2 workshops were done. One was on Power BI. Second was on again corporate tax. It was an elaborated session. One is 2-day Power BI session. Power BI is an up game, my dear friends. If you know Power BI, it is good. If you do not know Power BI, my request, a humble request, please try to learn Power BI. That's the upcoming skill. Microsoft Excel, when 1994 it came in, I think we hardly use it, but now it's an essence. Every organization uses Excel. Same way, Power BI going forward with the same up game. So you have to learn Power BI. We did 2-day Power BI workshop there. Corporate Dex, it's closed. Tax is always close to her chartered accountant. So we did 5-day city workshop. Still we are doing it. 3 days is over. 2 more days we'll do. 1 is tomorrow. 1 more will come. These are workshops. Workshops are normally attended by 100 people. If you see events, we have minimum 300 to 400 members. Workshop is basically 100 members, and it's a closed discussion with case studies, practical scenarios and other stuff. So we did 2 workshops. That was not all. We also did 2 focus group events. So we have 5 focus groups. That is more close knitted groups. 40 people attended, 40 to 50 people attended these events, and we did 2 sessions, one on tax and compliance focus group, which was on transfer pricing, which is new to UAE. We have seen in the rest of the world, but it's very new to UAE, so we did one session on transfer pricing. Second was on real estate. Real estate, everyone wants to invest. We did one session, and then today we will do something more on real estate today. So in total, we have 3 types of events which we did. One is the workshop, one is the focus group, third is the journal events. That is not all. This is technical, this is learning. But only learning does not help. So first let me summarize. 2 main events per month we did, 2 workshops, 2 focus group. 50 CP hours per member what session conducted in the first quarter. So if you take overall what we did, we covered 50 CP hours for each member in this quarter, 50 CP hours, and 1,348 unique members out of 3,000 attended this. 1,348, it's almost like 50% of the members have attended one session or the other with the chapter. Followed by total number of CP hours, which as ICI Dubai chapter we have added to you guys is 11,227. Total number of hours as CP in the first quarter by the committee. Please give a round of applause to the committee. They put in the efforts, so we get all these hours for everyone. Only work will make a person dead. So what we do, we love playing as well. What we did, we launched Sports Mania, and we did events on badminton and cricket. 2 events, one in badminton, one in cricket. 500 chartered accountants participated, and 100 plus awards were given into these 2 events in different categories of awards. 100 awards to 500 members participated. We did the technical sessions, we did the playing. We also did something called study tour, because we say travel and adventure is also one more way of learning. And we did 2 sessions on study tour. One was Kerala, and second one is Pattaya. Kerala done in April, Pattaya done in June. Many members went there and they enjoyed it. That is the third event where chapter engaged you in first quarter. We are talking only about the first quarter ending on 30 June. We did this. This is not all. Our responsibility towards society also is there. What we did a corporate CSR activity of distributing meals on the Iftar day. That is somewhere around 3,000 bags we distributed to all the labor camps, and that is what we have done as a CSR initiative. Overall, if I summarize, I can say it in first quarter, 29 days chapter has given something or the other in terms of technical, in terms of play, in terms of CSR activity to the members. Almost a month from 3 months has gone to you members. What we have done so far, 6 areas of engagement in total. 3 I told you, you will see it on the slide. It says general technical event, which we are doing today, like same thing. Second is focus workshop, which we talked about Power BI and taxes. We did something on focus technical event, which is focus group work we did. We did sports, and we did study tours, and lastly we do CSR initiative. So if we take all the events, I can classify in 6 areas of engagement. Around 60% of paid members got engaged in the chapter. 60% overall, who is the paid. As of now, when I'm standing here, 2,500 members are paid members. Other 500 will be renewing it. So 60% of the paid members have already attended these sessions. This committee has already added somewhere around 300 new members to the committee. This is what we have done so far. आप तालियां बजा सकते हैं, because आपकी तालियां gives us the josh to go on and on. Okay, one thing which we started this year is the feedbacks. What we did, we said feedback matters. Your feedback gives us the reason to improve. So what we did, we launched the feedback forms. After every event, we launched the feedback forms so that we can get your feedbacks. And we do receive feedbacks. Initially, there were some technical glitches, but subsequently now it's more smoother. We are getting feedbacks, but I will tell you what we have received so far. We have received 215 responses only. So total number of members who attended, 1348. Total how much we have received, only 215 responses. So we can do better, we can get more feedbacks. That will help us to understand where exactly we are going. Average score, if I take out of the feedbacks of 215 people, it was 4 out of 5. So I think committee is doing very good job. Not 5 of 5, it was excellent. 4 of 5 means we are doing very good job. That is out of 215 responses. The areas, feedbacks does not matter if we don't understand what is the area of improvement. We take out 5 areas of improvement, or 5 areas where I saw the concern from members from 215 responses. These areas are Sound system in the first event was not appreciated by you all. You were there, and from your feedback, we understood that their sound system was a problem. There was an echo there, and you did not like it. We take your feedback, and we worked on it. After that, on the next 5 events, you did not see a sound or technical error. In last event of Corporate Tax Beyond, we missed on one of the additional screens, and that was the feedback we received from our members that yes, your audio video functioning is not well. You need more screens there. Point taken, sir. We will ensure today we have ensured all the screens are there till the end so that all the members can review the screens. Other than that, there was few grievances regarding non-veg food. We are taking it seriously. We will ensure that non-veg counters are also there. It's always there, but we will ensure it's furthermore there. Same food option we also got for city workshop. People did not like the food. We take it. We are discussing with the hotel management. We'll work on it. And the last one which we received, Dusit Thani. I'm really sorry for what you experienced in Dusit Thani, but that was something which we are working on, and there were reasons for it. I'll give you in the last slide what exactly we can do together to improve our ICI Dubai chapter. If I look at these, all the 5 reasons for improvement, I will classify it as AV, audio video. The second one, I will say it's F&B, food and beverages, and the last one is other logistics. This is the only feedbacks I've received. A humble request to each one and every one of you, this is fine. I'm looking for some good inputs as to what areas where we can improve on, what areas you want to hear from us, what are the technical areas we should cover. That is where my focus is. My request, when you get the feedback forms, please tell us where we can improve on in terms of technical sessions, in terms of what more we should cover. That will help us more. That's my request to you. Last thing, this is a humble request. We are not pointing fingers. We are not doing anything. We are just trying to say that we together can do something about it. Out of total registrations, 1,100 members registered and did not appear for the event. 1,100 members. We understand sometimes you register, you are not able to attend it. There is no harm, please cancel it. Sometimes we are not able to cancel it. What we did, we said this is one time he did it. Can we see how many persons repeated it more than twice? We found 360 members doing it. More than twice they registered. They did not cancel also. My humble request, please do it. If you are not able to, it will take a minute. Go and cancel your registration. At least we know the slot is empty. At least our logistics will be well planned. That's second thing. I went further ahead with the data. Data speaks. What we did is we tried to see how many members did it more than 4 times. The member registered did not come to the event 4 times or more out of 6 events, and there are still 30 members who did it. I'm not naming anyone. I'm just saying as ICI Dubai chapter, you and me together can do better than this. That is my humble request. Let's try to register if you are able to attend. If you're not able to attend, please also give a cancellation request. We have the option to do it. That will help us. I just give you a summary. Out of our 60 to 70% of the registered members attend our events. So if you are registering 100 members register, only 60 to 70% right now attends. I want this number in the quarter T to improve. We can say 95% of our members who registers attends it. I look forward to this in the second quarter. Quarter 1 is already over. If we do a workshop, attendance is 95%. Well known. You are paying for it. 95% attendance we have seen in workshop. This is the number I want to see for normal events as well, where we are not paying it, but we need to do about it. Last session, 56 or 60% registered members on the focus groups. This is also a weak number. Together we can improve on it. Because if we do that, what we will do, which will help us to plan logistically better. Dusit Thani was one example where we failed because from 60 to 70%, the jump was directly 85%. I was not in country, but we tried to do a RCA, and we come to understand the root cause was the turnout was 85%. We could not handle it. So if that can be narrowed down, I will be more than happy. Humble request to look into it. Last, another member opportunity lost. With this, I can only say thank you. Together we can. That's the progress report for first quarter, my dear friends. You and me have delivered what we can do. Thank you. Okay, moving on. Okay, now let me jump directly to invite our chairman of the chapter, C. Harikishan Rankawat, on the stage for his chairman's address. Please put your hands together for evergreen person who leads the chapter from the front. You can do much better in clapping.
Thank you, Mr. Secretary, for a great job. I think he has already given a lot of input or insight into what we have done in the first quarter, and look forward for your support in future as well. Speakers of the day, Mr. Vikas Sachdeva, Mr. Madan Gopal Ramu, CA Ankur Agarwal, CA Binod Shankar, past chairman, my colleagues in the managing committee, and respected members of the chapter. A very good evening to all of you. First of all, I would like to place our special thanks to all the learned speakers who have come here to address our member out of their busy schedule, and also welcome each one of you to our investment and real estate summit. I want to ask you this question, that whether you have invested in the Indian stock market or not, because I know you must have invested at that, and that's the reason on the evening of Saturday weekend you guys are here. Now I would like to ask you a very personal question, that how many of you have made money in Indian stock market? Can you raise your hand? I can see that around 50% of the people have raised their hand, they made the money, and the remaining 50%, they didn't raise the hand. It means they lost the money. So I think the money, this is the balance sheet at the end of the day, so it is going from one hand to another. That's what is happening. And as you guys are aware, that even in the stock exchange, pay-in date is first and then payout date. So whatever they collect from 50%, they return it back to the remaining 50%. So ultimately, इस हाथ ले और उस हाथ दे. गीता सार एकदम सही है. क्या साथ लाए थे और क्या साथ ले जाएंगे? Today we have expert speakers from our event sponsor, Sundaram Alternate Asset Limited, who will give us few tips to make money in the Indian stock market. Now, as you guys are aware that UAE is known for its safety and stability, so it's an attractive destination for real estate investment. UAE has a very low crime rate and a secured environment, providing a safe haven for investors. Dubai real estate is generating very high rental yields, which is one of the highest in the world. According to Bayut's report, the average rental yield for apartment, residential apartment, is between 6 to 8%, whereas if you see in Mumbai, it's approximately maybe 2 to 3% or 1 to 2% generally. Now there is a growing population and a lot of expat community is coming in the country. So there is a consistent demand for rental properties. In addition, the thriving tourism industry contributes to the high demand for short-term rental properties like holiday homes and serviced apartments. Friends, my suggestion to you is to have at least एक मकान और एक दुकान. I mean, own one home and one office, so that we can convert this EMI, whatever we are paying, into investment and avoid paying hefty rentals. Our expert speaker, CA Ankur Agarwal from Bricks and Woods, he is our title sponsor as well, so he will be sharing his expert view on investment in UAE real estate. Apart from investment and real estate summit, we are also celebrating our CA Day as well, as Secretary informed to you. As you are aware that CA Day is celebrated on 1st July every year to commemorate the foundation of the Institute of Chartered Accountants of India. The institute was established in 1949 by the Parliament of India, and the ICI is the largest body of the chartered accountants in the world, with over 1.15 million members and students. ICI India functions under the administrative control of the Ministry of Corporate Affairs, Government of India, and they have got 5 regional offices and 168 branches in India. There are 45 chapters, 33 representative offices in 78 global cities of 47 countries. So we have branches out, branched out in various countries, you can see. And ICI India is celebrating 75th years of its existence, and ICI Dubai chapter has completed 40 years of its existence, and this is the 41st year, and we are having roughly 3,000 active members as of date, and winning the best overseas chapter for the last 10 years, and I promise you that the legacy will continue. Becoming a qualified chartered accountant is not a cakewalk. It takes a lot of constant hard work, determination, focus, and dedication. This is one of the reputed professional degree in India which doesn't have any reservation or quota system. Just to give you an example, Miss Prema, daughter of a Mumbai taxi driver who topped All India CA exam in November 2012 by surmounting all odds. So CA exam is very cost effective as well. Therefore, we must promote CA profession amongst the youth. Let me update you with our forthcoming events. Our next event will be happening on 22nd July on UAE corporate tax, and especially we will be focusing on litigation matters, and one of the High Court judge, he will be coming from India to deliver his address. Next month, we will be celebrating Independence Day on 15th August. There will be few cultural performances as well. ICI India is organizing a conference on solvency in Singapore on 4th and 5th of August, next month only. So, and the topic is Resolve 2023. So, they want to resolve instead of dissolve. So, I request all of you to attend in Singapore on 4th and 5th of August, if you can. And then UN is organizing World Investment Forum in Abu Dhabi from 16th October to 20th of October. And this conference is free of charge. So I request you to attend in maximum numbers. And ICI India is going to organize one more global conference, GloPac, from 24th November to 26th of November in Gandhinagar, Gujarat. There will be approximately 7,000 members from worldwide. They are going to join this GloPac, and it will be another WCOA, World Congress of Accountants, which were held in Mumbai, India last year. So I humbly request you to register and participate in a big number. And I am going to attend in Singapore, Abu Dhabi, as well as in India. Friends, CA Day is celebrated to honor the Indian Chartered Accountants. Chartered Accountant is regarded as one of the most honored and noble profession across the globe. These two letters, CA, represents trust, independence, ethics, and integrity, and excellence. Friends, if you have to tell the truth, you don't have to remember, and that's what we do. We are in the 75th year of ICI Foundation. 75 वर्षों का विश्वास, बस आप उसको बनाए रखें. Without CAs, no company can function, no business can grow, and no country can prosper. Can we have a big round of applause for the ExCom who have put in their best efforts in the last quarter? At the end, I would like to wish each one of you a very happy CA Day and wish you all the best for the 75th glorious year of the ICI. Thank you. Jai Hind and Namaste.
Thank you, Chairman C.A. Harikishan Rankawat, for sharing the calendar ahead with all of us. It's time to cut the cake to celebrate CA Day. The cake will be also part of the buffet so that we all become part of it. We'll request all the ExCom members to join me on the stage for cake cutting. We'll request all the past chairmen to join us on the stage for cake cutting. We'll request Sri Ram Baksani sir, if you are there, it's our privilege, please come on the stage for cake cutting to celebrate CA Day. सर तालियां बज जाए तो ऐसा लगेगा नहीं कि वेलकम हो गया है. So cake is really nice. I can see books of audits, books of taxes, books of valuations there. If you want to have a look, we'll keep it there for some time. If you want to have a look, it looks really nice. So I loved it, so I just communicated the same. Okay, moving on. I know you have already waited long, and now you are eager to grow your money. Any further delay, I am sure you will pull me off of the stage. So without further ado, let us get into our first technical session on the day of the topic, investing in growing economy. We are Indians. And whenever we talk about growing economy, our heart starts shouting this economy is nothing less than India. But is it actually India? I don't know. Let us hear from our speaker whether he's speaking about investing in India or he meant some other country. But before I invite our speaker Vikash, let me invite our money man, CA Rishi Chawla, to introduce Mr. Vikas Sachdeva to all of us. A big round of applause for Rishi.
Thank you so much and happy CA Day to everybody. I mean, looking at the cake, I was like, as an accountant, we were auditing the cake itself. By the way, done a tremendous job. Calculator to computer, everything was there. So please do taste the cake later on. Dear members, distinguished guests of the day, ladies and gentlemen, a very warm welcome to all of you. And we are very grateful that you have joined us today. The word investment is so powerful that if put to the right place, the money works for you, rather you work for the money. And investment also comes with a level of risk to reap rewards if invested properly. We always hear about this stock to buy or that stock today, but there is nobody who teaches us what is the level of risk one should take, especially in a growing economy. To shed more light on this, we have a very knowledgeable speaker, Mr. Vikas Sachdeva, Managing Director of Sundaram Alternate Assets Limited. He has over 3 decades of experience in assets management business. He started his career in asset management as one of the founding members of Birla Sun Life International AMC Limited. Vikas has been instrumental in turning around companies like ING Investment Management in India. He was the CEO of Ed Lewis Asset Management Limited, successfully turning around the business, culminating in the acquisition of JP Morgan Mutual Fund in India. He has also been the global CEO of Inam Asset Management Limited, where he oversaw the global and domestic side of the business. He formerly served as the CEO of MK Investment Managers Limited, a wholly owned subsidiary of MK Global Financial Services. He has been an erstwhile member of Mutual Fund Advisory Committee, a highly powered committee appointed by SEBI to advise them on the governing mutual fund industry. SEBI is the stock market governing body of India. He has also been on the board of Association of Mutual Funds of India, heading the ETF and Indexing Committee, which submitted the first white paper on ETF to SEBI. More recently, he was associated with Asset Managers Roundtable of India, the nodal body of FPIs in India. There is so much to talk about him, but without holding you and the speaker to take us into this important session, ladies and gentlemen, with big round of applause, please join me in welcoming Mr. Vikas Sachdeva.
Good afternoon, everybody. It's indeed a pleasure to be here. In fact, I was just reflecting on Prime Minister Modi's words when he was talking about India's Amrit Kal and the fact that the CA chapter, the CA Institute itself has completed 75 years. I don't think it's a coincidence that the growth in the country has actually happened because of institutions like the ICAI. So congratulations to all of you, 75 years, and it's a marvelous, marvelous achievement. As an MBA, I must tell you, I've always been envious of CAs. You know, they get that much more respect out there, that much more credibility out there. But I know why. I've had the privilege of working with some of the smartest brains in the industry in India. And I think congratulations to all of you. Also, I was amazed at the number of activities which the Institute has done over the last 3 months. I've been part of several boards and several associations, and I can tell you it's not so simple. 29 days out of 90 days in terms of activities. My congratulations to the team, to the committee who's doing this. This is quite amazing. Before I go ahead, I think, in the investment management business, we actually put out a lot of risk factors. So I would just like to say that whatever me and my colleague Madan Gopal Ramu are going to be talking here today is just for information purposes. Please don't take it as advice to invest. Please consult an advisor before you invest. And more importantly, please do not consider this as solicitation for investment. Now that I've got that out of the way, let me just start off. Every 4 or 5 years, I think all of us have been through this. In fact, I was amazed when I saw only 50% of the hands go up when it was asked how many people make money. That's quite a low number, actually. And I think more than the type of investment you invest in, it's actually attributed to 2 points. One is behavioral finance, and the other is asset allocation. I'm not here to talk about either of them, but I'm very happy to answer questions as we go along. I'm here to answer one question. Every 5-6 years, somebody comes up and says, India's on a roll. This is the time for India. Nothing can beat India. We start off and then we stop. We start off and then we stop. Global magazines keep talking about, will the elephant ever dance? Can the tiger be caught by its tail? Etc., etc., etc. Well, we've tried to understand the phenomenon which is happening now in India at the ground level. I'm sure a lot of you know about it, but we sense it, we feel it, we see it, we experience it every single day. I'm as much a patriot as you are, but I'm as driven by data and logic as all of you are. I would like to believe that there's something happening out there at this point of time, which is transcending India from just being one of the developing economies to being on the path of becoming an economic superpower. And I will probably share some slides, some data, some logic to buttress my point. I'm not going to get into leadership discussions. I'm not going to get into the politics part of it. This is sheer data and logic. Okay, so India's thought leadership leading to economic leadership. Traditionally, you have found that any country crossing $2,000 per capita income generally leads to a lot of prosperity happening. You will find consumption going up, you will find a lot of happiness happening. The per capita income increase will enable more and more people to save their money rather than spending on basic necessities. But not every country becomes a superpower. Here we're talking about why we feel that India is on its way to becoming an economic superpower and what are the implications of that. Let's talk about one very simple thing. We've all seen this happening. It's actually been an undercurrent throughout. If you go back in 99, when the Y2K phenomena was happening, India stepped up. Most of the companies in India like Infosys, Wipro, and all of these companies stepped up and scaled manifold just to cater to global demand for Y2K. That was the first sliver of light you saw that India could compete at a global scale and India could provide thought leadership to the world in terms of tech. What has happened over the last few years through a manifestation of tech, talent, digitization, there have been various phenomena which have started happening. Let's talk about, and actually countries across the world have been noticing what's happening in India. Developing countries across the world actually have been seeing that a lot of direct benefit transfer, what used to happen in terms of subsidy leakage, has been plugged. People are getting money directly into their accounts, which is largely because of the Jan Dhan accounts providing access to benefits of over 1.7 lakh crores. Interestingly, I must tell you this article I read, I think 8-10 years ago, when Aadhaar was just coming in. There was this newspaper article which actually came in Times of India, which said that because of this direct benefit transfer which was happening, a lot of universities were starting to get grants directly into their accounts. It was found that 47 universities actually existed only on paper. 47 universities in the country existed only on paper and subsidies were being transferred to them. The moment you had Aadhaar verification, the moment you had a lot of other things, they just vanished. You're also seeing now the phenomena of low-cost payments via UPI. I think the last 24 hours that I've been here, I've been hearing incessantly about people saying that when I went to India, I tried to fish out a 500 rupee note to give it to a rickshawala and he says, listen, I don't have change. Can you give it to me by GPay? Okay, so this low-cost UPI payments is being watched very, very closely by middle-income countries to enable the facilitation of cash from one person to the other. It's now quite common in India, as you would imagine. More importantly, I think the developed countries in the world have actually seen us manage COVID. We all know about the way we created resources in terms of vaccine production, but I think one of the telling comments I heard was from one of the people I spoke to into the US. He says that you are probably one country which was giving digital certificates the moment somebody had a vaccination. This was unprecedented, never seen in the world. Now the world sees that. The world sees what we are doing in terms of technological solutions, and the world wants to learn from you. And why is it so important? I will just tell you as we go along. Some of these things you already know in terms of India advantage. I think I'm preaching to the converted, in terms of pro-growth policies, in terms of reducing cost of credit, etc., etc. I won't devote too much of time here. Some of these news items you would have already seen. You're talking about, launching of Vande Bharat trains at one end, to creating infrastructure across border areas. You're talking about solar energy, hydrogen energy, and the amount of money. India, incidentally, is the third largest player in terms of solar energy globally, and I'll show you some slides. We're becoming the food basket of the world. We are already replacing China as the smartphone hub. I think that's something which is quite remarkable. And of course, more importantly, I think there has been a 50x growth in terms of startups across the world just in the last in India, just in the last 5 years. This is a slide which might interest all of you. I had presented this a few months ago, and it caught a lot of attention. We all believe that the dollar returns actually are, for whatever investments come out of India, pale into comparison as to what happens globally. This is as of December 2022. This is authentic data. The source is Bloomberg. And if you're talking about a comparison with the top indices in the world, whether it's S&P 500, FTSE, Topix, Hang Seng, Kospi, MSCI, you will find across a 1 year, 3 year, 5 year, 10 year, 20-year period, the returns are startlingly predictable, good. India is number 1, 2, or 3 in terms of the returns. These are US dollar denominated returns, and these are index returns, okay? Which is why I'm a little surprised why 50% of you have still not made money as far as India goes. Let's talk about the growth of India. These are again some points which you would be aware of, but I'm just trying to put things in context, and maybe some part of the context will be picked up by my colleague Madan as he talks you through. India is outpacing growth across the globe. If you see the difference between the growth in India versus the rest of the world, it's close to 5%. But more importantly, look at some of the parameters. From 2014 to 2022, the years are incidental. I'm not trying to draw any comparison here, but India has displaced some global giants in the world market. In auto, we are already number 3. We've displaced Japan. In electricity generation, we are number 3. We've displaced Russia. In mobile phone production, we are number 2. We've displaced Vietnam, South Korea, USA. Steel production number 2, and so on and so forth. Okay? This journey, I believe, has just begun. Now let's look at how the world is looking at India. It's all data and logic. If you're doing well, if the world is looking at you favorably, your proportion as a country in the emerging market index will start going up. Okay? And it started going up. From 2020 to 2022, you will find that the proportion of India in the MSCI emerging market index has gone up from 8.2 to 14.8. It's unprecedented. So what exactly is happening at the ground level? You know, they say that history always repeats itself. Only the protagonist changes. Are there some markers which history has left behind for us? Why are we reasonably confident now that India might become an economic superpower? Are there some markers? And if there are, what can we expect going forward? Well, actually there are. Let's look at America. See, the key thing is, the two key factors. One is what happens when a country crosses $2,000 per capita income, and two is what is the vision the world is buying into. The world has to buy into your vision. Just crossing $2,000 per capita income doesn't make sense. So in 1950, the US crossed $2,000 per capita income. And for people who are around from those times would recollect that the single biggest export from America at that point of time was the American dream. We were coming out of a post-World War scenario. There was famine across the world. There was pain across the world, suffering across the world. But here is this country, through its pipe of Hollywood and a variety of other instruments, they were saying, come to America. America is your land of dreams. America is a place where everything works. Our cupboards are full. Our families are happy. Our houses are warm. We've got fireplaces. This was the vision the world bought into. What happened because of that? We are seeing the impact, the ripple effect happening through decades after that. They attracted a lot of migrant population. Just look at tech, for example. I think Indians rather, are driving American tech in a major way, not just as leaders of the organization, but across the value chain, right? And it's not just restricted to India. A lot more migrants came to America to fulfill the American dream. Now, what America also started talking about was consumerism. It's not a crime to buy, to eat, to enjoy life. It gave rise to giant companies which fulfilled this demand. The first manufacturing behemoths appeared in America. The first companies focusing primarily on food and food-related, ancillary industries appeared in America. The first franchisee appeared in America. So much so that by 1970, dollar became the world's reserve currency. And of course, we know that since then, we have been funding America's growth as the world. Let's talk about China. Capitalism-oriented communism. Here's a country in 2005, 2006, crossed $2,000 per capita income, and its vision to the world was, we will manufacture for you. We'll probably give you close to Japanese manufacturing practices at a scale which is American. The world bought into it. And that is how the success story of China becoming an economic superpower started happening. Let me give you a few more statistics. Let's look at USA's transformation. USA crossed the 2,000 per capita GDP in 1950. And of course, if you're talking about the transition from an agriculture-oriented economy to a services-oriented economy, it happened during this time frame. The crucial role of financial services, there's a reason why I'm just picking these points out. It is to give you a sense of where India is starting to move now. The crucial role of financial services sector, it can't be ruled out, but just look at it. From 1950 to 2010, that's the data we've collected, the share of the financial services sector as a percentage of US GDP grew from 3% to 10%. This is on a growing, fast-growing base. And the assets of commercial banks grew by 2x just in the last 10 years. You look at China. China actually has grown right under our noses. There's a 6.5 time growth in the per capita GDP in the last 15 years. They're focused on building a manufacturing base. But it's interesting that today, China, which was earlier known as the sweatshop of the world, insisted that global companies come to manufacture, but have Chinese companies partner them. Today, Chinese brands are 15% of the world's premium manufacturing brands across the world. They are now fighting their masters in their own den. Look at China's per capita consumption growth. In 2000, 1.2 billion Chinese people, in terms of purchasing power parity, the total income was just $11. By 2030, it's the same class which will drive consumption. It's already driving consumption unprecedentedly. In fact, this is going to be probably the top of the pyramid in a lot of ways. Let's talk about China's financial system. 1996, there was just one bank in the top 10, which was Chinese. You're talking about 2019. The top 4 banks are now Chinese. China is the third largest equity market. China is the third largest debt market. China is the third largest insurance market, and it's the world's largest destination for FDI, in fact, in 2018. Of course, things have cooled off after then, but this is just to highlight a point. So what will drive India's golden era? Okay? Well, there's too much of prose here, but I can just tell you, it's basically income growth, political stability, enabling regulatory environment. We know we're checking the boxes, but let's see what's actually happening. There are 3 mega trends currently: global offshoring, digitization, and energy transition. By the way, we just crossed $2,000 per capita income a couple of years ago, right? India is the new protagonist on the world stage. Okay? We believe that the India story is primarily driven by low-cost tech solutions. The world is now starting to ask and buy into India's expertise in low-cost tech solutions. Just scratch the surface, start reading the papers from this perspective, and you will see it's getting more and more and more and more evident. So much so now that the US visit by Prime Minister Modi has highlighted a lot of exchanges in terms of data, in terms of technology. They're talking about now taking India along with them to the moon. So there's a lot happening in technology. Incidentally, I must also mention this thing to you. I think it was around a year ago that I was speaking to somebody senior in the Ministry of Finance, and I just asked them, there was this huge controversy which was happening about data servers being located within India. You remember that controversy? A lot of global corporations had said, why is India insisting on data servers lying within India? Well, the perspective of the government at that point of time, which probably is playing out right now, I was told that, because do you realize that India today is the world's largest Petri dish? All of us understand what a Petri dish is. You make laboratory experiments in the Petri dish. It's a lab experiment. It's the world's largest lab experiment in terms of data and analytics. Nowhere in the world will you find so many demographics, so many habits, so many cultural differences, so many buying propositions. Why would we want this data to go outside the country? And then, of course, we started hearing data is the new oil, etc., etc. And we now understand why this has become such an imperative. If India is indeed on the way to becoming an economic superpower, and I'll show you some statistics, there are 4 ginormous opportunities. Ginormous is a word which combines gigantic and enormous, and it's not an exaggeration. I will ask my colleague Madan to talk about it as we go along. But just to give you an idea, the 4 structural opportunities which we see, we are not talking about stocks, we are not talking about sectors, we are not talking about trends, we are talking about structural opportunities which will last for more than a decade going forward. A, financial services. B, consumption. C, phygital blue chips. One thing China has taught us, how they've used data within the country, okay? And D, exports, which is manufacturing. Let's talk about financial services. Financial services is not just your conventional banks. In fact, most banks have now become fintechs. Our perception about banks, especially in India, is the same, old lending business, etc., which is there. But from public sector to private sector, they're far more agile than what we can think of. Not just that, financial services has been sliced and diced into a lot of things. You're talking about, mutual funds, retirement funds, AIFs, life insurance. It's the whole gamut of things. In fact, India's financial assets as a percentage of GDP is expected to grow from 57% currently to 74% in the next few years. Digital economy, again, all of us know a lot of things about this, but if you look at it, right now we have not even crossed the Rubicon in terms of rural India. That is one big internet explosion waiting to happen. But the statistics as of what stands now, our internet penetration is probably 2/3 of what the world's level is. Even then, we are ranked number 2 in terms of app downloads. We are the third largest ecosystem in terms of startups. And of course, a lot of jobs are being generated. Export market, I think we're just starting. Most people tend to have a little bit more bravado on manufacturing. They're thinking that, we are already China as far as manufacturing goes. No, I don't think that's true. I think we've got a long, long, long way to go in terms of manufacturing in the country. Having said that, there are segments which are doing brilliantly well, and they've already scaled up massively. Chemicals is one of them, okay? And I will leave it to my colleague Madan to explain as we go along on this. So, my limited point here is that we've seen markers left by history in terms of China and the US. We've seen $2,000 per capita income being crossed, and a vision which is being bought in by the world. Whether it's the American dream or manufacturing, for India, it is low-cost tech solutions. And we'll see more and more and more and more of these conversations coming along. It might not necessarily be in UPI. We've seen, for example, the Chandrayaan being launched. That's a low-cost tech solution, right? So there are so many more things which are likely to come about. Now, if you have to play the India story, one of the best ways to look at it is to play it through the alternatives point of view. There are actually 3 ways you can play primarily. I'm just oversimplifying things. You can buy the market through ETFs, and you have various types of ETFs coming in. It's a fairly vibrant market. You can buy something beating the benchmark if your risk appetite is lower through mutual funds, or you can get into alternate investment funds, which are for the savvy investor. What are alternative asset classes? Basically, these are the 5 things alternative asset classes give you today, which includes portfolio management services, category 2 and category 3 AIFs. One is innovation. Most of the people in this room have access to information about global ideas and global products. You would want to have a vehicle which invests, for example, in unlisted stocks, unlisted debt, to make sure that the energy which is coming through from India in terms of new ideas and innovation gets encapsulated. And AIF does that for you. Asset allocation, there's low correlation with conventional assets. I'll show you some data points on that also. Non-standard treatment. A conventional AIF cannot take more than 1,000 investors, just 1,000 investors. These are 1,000 investors who come in with a particular objective in mind. They have probably the same risk appetite. Curated thematic products. If 1,000 people decide they want to focus on unlisted equity which invests in robotics in India, an AIF can be created. And of course, access to the best minds. More and more fund managers in the listed and unlisted space are actually setting up shop in the alternate space. What are alternatives? This is just to give you an idea. This is just the beginning. The thriving AIF ecosystem in this country, private equity, venture capital, co-investments, hedge funds, real estate, special situation funds. Credit, domestic credit itself is 2.6 trillion. Mutual fund AUM is 472 billion. It's actually gone up right now. So the alternate assets AUM is around 84 billion at this point of time. I talked to you about reducing volatility, and I think as chartered accountants, this might be of interest to you. And this data is available freely. This is data from Bloomberg. What if you added alternatives to conventional portfolios? For example, if you had a 100% bond portfolio and you added, say, 20% alternates, what would be the resulting volatility and difference in returns? The volatility would go down by 26% and the returns would go up by 14%. Conversely, if you have a 100% stock portfolio and you add 20% alternates, the volatility actually goes down by 18% and the returns actually increase by 1.5%. So honestly, if you're still losing money at 50% of the people, you probably need a fresh perspective to look at how you're making money. The global alternatives industry, is this something which is an India phenomena? Actually, no. This is a global phenomena. I won't take too much of time on that. I think globally it's around 14 trillion. In India, private equity and private debt are expected to explode over the next 5 years. There's a lot of hunger for capital which is coming in. In fact, it's expected that at this point of time, there are 410 family offices in this country of a certain size. They themselves are expected to contribute to 30% of the growth of startups in the ecosystem. I talked to you about growth of alternatives in India. Maybe I could take this with a pinch of salt because it starts with a lower base. But what is interesting is that the growth is very, very consistent. This is what it is. We track these 3 verticals. This is the current AUM of the 3 verticals in India, AF Cat 2, AF Cat 3 and PMS. And I think all of them have grown by 20%, 55% and 44% over the last 7 years. Like I said, just a little bit of introduction about us. I'm just going to talk about our product suite. Madan will probably talk about the group, etc. But we believe that we have a platform which, we can capitalize on the India growth story. You see, the biggest problem at this point of time when you look at investing in India, you have some very smart boutique fund managers, okay? But there's a very big key man risk there. On the other hand, you have some very strong institutional names, but the returns are very pedestrian and predictable. Sundaram is probably the only brand in the country at this point of time which will give you a boutique type experience in an institutional framework. We have both a mutual fund and an alternates business, and we are the only group in the country at this point of time which has a separate managing director for both these lines of businesses. I head alternates, my colleague Sunil Subramaniam heads the mutual fund. So we've got equity market capabilities, we've got debt market capabilities which are cutting edge. This is how our AIF platform has been growing. We are close to 700 million in terms of AUM, and we've been growing very rapidly over the last few months. Some of the products which we have, interestingly, again, for connoisseurs who understand track record, we've had a 10, 11, 12-year track record in most schemes. Post expenses, the alpha generation has been anything between 5 and 6%. This is, of course, in rupee terms. But to maintain an alpha of 6% post expenses for 12 years is not funny. And some of the awards which have acknowledged that. We run the same strategies, or rather the same fund management team runs strategies across the AIF platform. Private credit is something which we started in 2018, but this is core to our DNA. Sundaram Finance, which is the parent company, has been around for 40 years, and this is the only company in the entire industry, once it has gone public, it has never again gone to the public for raising funds. Everything has happened through internal accruals. Like I said, credit runs in our DNA, so we've got a high-yield secured debt fund, real estate debt fund. Incidentally, we had the first real estate debt fund which was launched in 2018, ran into GST, ran into COVID, ran into demon. Despite that, in rupee terms, we've returned 100% of the money back with an XIRR of 15.6%. That should give you some idea. By the way, Sundaram themselves invest up to 20% in that scheme as skin in the game. We won some awards for that as well. I'd just like to end this particular presentation by revisiting what I just told you over the last 20 minutes in terms of the India story. You see, we have two choices. One is we continue to be skeptical and say this is yet another presentation which has come in and talked to us about, India story. Every 5 years, somebody like Vikas will come and give it to us. But they say that history is a very bad motorist. It rarely signals when it makes a turn. This is probably that moment. I don't think anybody of us realized what happened in 1991 till it actually started dawning upon us. How many of us have actually benefited in our careers because of 1991, what Manmohan Singh did, right? Am I right? A lot of us have benefited, but we didn't realize that till the next 7, 8, 10 years later, that the tailwinds which happened because of that. I would like to believe that right now is that rarely ever moment where history is actually turning a page. Let's just be mindful of that. Let's just embrace the fact that nothing is secular. There will be volatility along the line. But finally, it looks like India is going to get its place in the sun, and we will be known as Sone Ki Chidiya. Thank you very much.
A round of applause to Mr. Vikas Sachdev. Thank you, Mr. Vikas Sachdev, for your words of wisdom. Third largest startup ecosystem. Third and second steel largest manufacturing country, mobile manufacturing country, electricity. My heart was pumping like India is a growing story. Regarding this signal, sir, they do give signal. They don't tell us whether it's red or green. So whether we will hit a red block or we will make money, we don't know. The signal is always there. Thank you very much. We'll request Chairman and Treasurer to join me on the stage to share a token of love and appreciation with our speaker, Mr. Vikas, for showing us India is indeed a growing story. For India, please give a round of applause.
So, Mr. Vikas, 50% of the CA didn't raise their hand. It doesn't mean that they didn't make money or they lost money. CAs generally are very conservative. They have made money, but they don't want to tell the world.
Trust the CA to correct an MBA. Thank you very much.
Moving on. Yes, indeed, it was India. India is that growing economy. Having this or hearing this, eyes glittered, smile widens, chest pumps. Yes, that's Indian soul within us, which makes us do all that. Now, if India is growing economy, our money, if invested in India, will also grow. No, that's not Indian soul speaking. That's a chartered accountant within me speaking that invest in a growing economy. And to understand where to invest, we have another speaker, Mr. Madan Gopal Ramu, who will tell us where to invest. But before inviting Mr. Madan Gopal on the stage, I'll invite our energetic and experienced EXCOM member, CA Dharma, on the stage to introduce the speaker to us. A round of applause for Dharma, please.
Good evening, everyone. 75 years in India and 41 years in Dubai. Congratulations, everybody, for being part of this success story. Our next speaker, Mr. Madan Gopal Ramu, is head equities and fund manager with 15 years of experience in the Indian financial markets. He currently manages an asset under management around rupees 3,400 crores and has over 6 years of experience in managing funds. He managed Sundaram India Secular Opportunities Portfolio, Sundaram Emerging Leadership Fund, and Voyager PMS Strategies, which recently won awards at PMS Bazaar's PMS Ranking 21-22 event. Madan joined Sundaram Mutual Fund in 2010 as a research analyst and from Centre Broking, and he has made rapid progress during his tenure in Sundaram AMC. He became the head of equity research in April 2015 and started actively managing funds from January 2016. He is a qualified cost accountant and holds a management degree from BAM Trichy. Now, there is a secret. His entire team, except one, are chartered accountants. Ladies and gentlemen, please join me to welcome our next speaker, Mr. Madan Gopal Ramu.
Good evening. Yes, a special respect always I carry in my heart for chartered accountants. And that's exactly when he asked me what you can say about chartered accountants. I also started my career by thinking that one day I'll become a chartered accountant. So started with cost accounting, but in the midway, the path changed towards MBA. But my team is a five-member team. All of them are, except for one as a chartered accountant. So always there is a respect for chartered accountancy and its profession in India for the kind of rigor they bring in on the table. And so where to invest? That's the point with which it was ended. So India growth story, I think with the huge presentation that Vikas has done, India growth story looks something which is happening. But I'll just try to link this to what are we doing as an investment house to create wealth. And it will be a little more specific about which sectors and where to make money as this story plays out. So what we say is, if you believe India growth story is happening and if you want to invest in it, we say these four themes. We say that you go long on these four themes and short on every other sector in India. And that's exactly what Sundaram Alternates is offering to the investors. So the path is, we believe that India's growth story is happening. How much is the growth? We think that is somewhere closer to a 6% sort of a GDP growth rate on real terms, and a nominal growth of around 10% looks doable. If we believe in that story, you go long on these four themes and short on every other sector. That's the way in which the entire strategy is designed in Sundaram Alternates. And I'll just start with saying some connecting points between what Vikas mentioned and how the investment team thinks. When your time arrives, things fall in place, right? That's a point that we always hope to happen. So what is that happening which makes us feel that the time has come? There are very specific things post-COVID that has happened. And these pointers were looking very different in a pre-COVID period. First point, I think 2,000 per capita income, I think Vikas has spoken about it a lot of time during the presentation, which was always there. And before COVID also, we have touched that point. The scale for India is now becoming. Scale in various sectors, India is becoming a large player. I need not mention the IT sector. There are other sectors also where India is becoming large scale. And second thing, most important that has happened in India is post-COVID, the entire banking system has got cleaned up. Probably in the last 10 years, I have not seen the most clean balance sheet for India's banks as it is at this point of time. One of the lowest NPA period for the Indian banking system. So what does it offer? If there is an opportunity, the banks are well capitalized to lend and support the growth. And the third point is, the world post-COVID is clearly looking for a counterbalance to China, not only on diplomacy, but also on the supply chain system. They want another country to take over a leadership so that they can counterbalance the threat of single source of supply for even basic life necessities, as much as like drugs, as much as like pharma products, or even APIs for pharma, or chemicals for basic commodities. Everything comes from China. So there is a threat that has started coming. It did not start with COVID. It started with Beijing Olympics sometime 6 years back, when they shut down a particular city which was manufacturing chemicals, and then that led to a lot of shortage of that chemical. And then it just went on with the pollution control norms introduced by China time and again. China doesn't engage with the world. They just shut down. So this has started creating a lot of question marks on the supply chain itself. And COVID hit that in the nail. All of us know, like, China went for a shutdown completely, right? So that again created a lot of question mark on supply chain. So world is looking for a counterbalance. It's not looking for a shift out of China. That is not happening and is not going to happen immediately, because China's scale is too huge. So world is just looking, if we have to invest for the next leg of growth, can India be looked at as source? Because not other major emerging countries are offering what India is offering at this point of time. So when the time has come, I think there are things falling in place. It's not only about the policy reforms that India has taken, but also has to do what is happening elsewhere in this world. And that makes us feel that India can slowly and steadily get into this mode of growth, and for a longer period of time, which was definitely on a question mark in a pre-COVID period. If you want to play, then what do you play? How do you really play this entire story? So I'll just take some each of these themes and explain 4 or 5 points on them, and then talk about some stocks which we look very looks interesting from that point. So obviously this broader theme is this, that the growth per capita income increases, the financial system in the country or the debt in the country increases, the consumerism grows, and then manufacturing definitely gets support with all the government reforms that is happening. And obviously the India digital story is all known, but what is happening inside each of these terms? See, if you look at household debt to GDP, actually India's debt to GDP is much lower than many of the emerging countries. And when it comes to household debt to GDP, which is nothing but what is the average credit of an Indian taken from a banking system, is 20%. And you know where China is? 80%. Not forget about China. China is much bigger. And let me not take China also into consideration. Thailand and some of the other emerging countries, even I think Vietnam, Mexico, these countries have 80% household debt to GDP. So what does it mean? In India, the average debt in every household is much, much lower than what it is for a very similar sort of countries elsewhere. The reason is there is still a lot of unorganized lending that happens in India. So if you want to play the India growth story through the banking system, I think you can do it in 2 ways. Obviously, the household debt to GDP is going to increase. So how do you play this? You play this through retail banks. You can play through an ICICI bank or an Axis bank, who are all going to be very strong retail credit focused. So we have shown the credit card spends in India can go up. And if you remember the entire growth journey of HDFC Bank in the last 15 years, of late, HDFC Bank struggles to grow, but for so many years, HDFC Bank's profitability was determined by the credit card business. So the retail credit in India will grow multifold, and that you can play through private banks, because they are very active in the retail credit, because it requires a bit of ability to be proactive in lending. On the other side, you can play financial inclusiveness, and this is our favorite area. What is it? If you look at India, there are two India within the geography. There is states where the per capita income has not yet crossed 1,000, and there are states on a dollar PPP adjusted has already crossed even $10,000. So these states are offering a situation that people can shift out of unorganized lending to organized lending. And where all this is happening? It is happening in vehicle financing, it is happening in affordable housing, it is happening in small business loans. And we are slowly, steadily seeing a lot more credible players coming out of it. And Sundaram is a classic story. Sundaram Finance is a lender in vehicle finance, housing finance, as well as it's also, we run a mutual fund. So there is a background, and what we see and what we explain here is what we see in our parent, what they are doing. So if you look at a state like Tamil Nadu, where I come from, per capita income is high. But what is important? We have a stock called 5-Star Finance. This company lends 2 lakh, 3 lakh rupees for people who are doing business on a cart. He might be selling pani puri, or he might be selling samosas or bhaji, whatever it is. These are cart based. They are mobile shops. They lend 2 lakh to 3 lakh. Can you imagine each of these borrowers have a housing secured for this loan? They have a house and it is secured for the loan. If not for the 5-Star Finance, they have been using an unorganized lender, and they have been paying interest of almost 36% rate of interest. 5-Star Finance lends them at 25%, not cheap, 25%, but the catch is 5-Star Finance gives them 5-year loan, not 1-year loan. And we know calculation of EMI, right? The cash outflow for that guy is same, whether he pays to the unorganized lender or he pays to the 5-Star Finance. But he does not have, he has a long gestation period, and he is not wanting, so if he is only paying the interest in the unorganized lending, when it comes to the principal payment one year down the line, then real cash crunch starts, right? So here he gets the flexibility that he can pay the same EMI or same cash as an EMI and pay for a 5-year loan. And this is shifting a lot of people to this organized lending. And why we feel this model works is because in a state like Tamil Nadu, the per capita income is higher. You lend to this guy, the chances of you recovering that money is much, much higher. If you do the same thing in other states where the per capita income is lower, probably you need to be much more careful. So that is an emerging opportunity within the investment space and within the financial space where we see more companies as an opportunity. So one is 5-Star Finance, another is Home First Finance, which is again home loan, ticket size of 10 lakh. And they give it to people who probably work as clerks or work as teachers in a government school, not within the city, but probably say 50 kilometers away from the city in Tier 1 or Tier 2 cities. They don't have a very clear proof of income, but the household income is almost like 50,000, and they end up paying 20,000 rupees as the EMI. For this, you cannot do digitization. You can collect the money on digital, but you need to go and visit the house of the borrower and do the underwriting yourself very carefully. So these are the opportunities that we see in the financial space. So in the financial space, the household debt to GDP is likely to grow multifold, because as the per capita income increases, leverage spending will increase. A lot of people will buy cars, houses on credit. And the best way to play is play the retail credit players in the private banks. On the other side, play smaller companies which are benefiting from this shift from unorganized lending to organized lending. By the way, the kind of profitability that these unorganized, these guys who are doing this financial inclusiveness do is mind-blowing. The ROA of State Bank of India is 1%, you know, right? The return on assets of State Bank of India. The ROA of the Home First Finance is 3.5%. And ROA of 5-Star Finance is 8%. So there is a lot of profitability, but there is a lot of risk. And that's where our role comes into picture. So we try to see that how they behaved in the past and the way the underwriting is done. So we have certain metrics, which is what we have learned from our parent, we can say, and we try to select stocks based on that. We have other 2 ideas, but just wanted to give 2 points on that. These are the points I already covered. I'll come to the phygital side, but I just mentioned phygital from one point. The number of internet users in India is almost closer to China, but when it comes to online shoppers, it is not even 10% of the China's size. Obviously, we will catch up with China in this particular aspect much faster than many other aspects that we have seen so far, is what our view is, because it has happened. And we have a name like Zomato, which we feel currently the number of people placing orders on that food delivery platform is minuscule. And the kind of number that player in China is doing, hardly I would say 10% of that. So there's a long way to go for digital players. But my point is, today we don't have stocks which are playing another theme within this, but we strongly believe that theme will happen, but there is a period of next probably a year we need to wait and watch. AI, in our opinion, is likely to be a game changer. We feel that globally, tech spending in artificial intelligence will go up significantly, but obviously, next 2 to 3 quarters, you will have a slowdown hitting globally. Therefore, this is a discretionary spending by companies. There could be some slowdown, but that can give you amazing opportunity. And when this happens, I don't think Infosys and TCS will kind of make big numbers. Where it will happen is in the mid and small cap space. You will have small companies, because the ticket size of these kind of projects will be not multi-million dollars, not $100 million or $200 million. It will be in, say, $20 million, $30 million, $50 million. So a lot of mid-cap companies who have capability in the AI space, cloud space, I think that area is very important. We played this, but we exited last year from these stocks because valuations just ran up too much. We had names like Tata, Elxsi, Mindtree, which are companies, Happiest Minds. These are companies which we played, but valuations went too high, and now the slowdown is also coming, so we are just staying away. But this is a theme which is definitely likely to happen, and India likely to play a bigger role in that way. I think consumption side, I think we have talked so much about it, but the key driver for this is the number of households which will be earning approximately 10 lakh rupees as an income will go up from roughly, go by almost like 5 to 7 crore number of households in the next 10 years. This has happened in the last 10 years. The same thing will happen in the next 10 years. When 5 crore households, let's take conservatively, if 5 crore households start earning 10 lakh rupees additional income, you can do the mathematics yourself, how much of that will drive consumption and how much of that will drive the spending on products that we are talking about. Here, what our team does is, we don't play consumption on FMCG companies. At every stage of per capita income growth, the consumption basket changes. So in India, if you are going to make money, you are not going to make money by investing into a guy who is manufacturing soap or hair oil. Probably that was 10 years back, when these companies were seeing growth of rural penetration. But today, if you want to make money in investing in consumption, you have to invest in consumer discretionary. If you look at, let's take auto sector and see where the growth is happening. Auto sector in India, 2019 was the last peak, and then we declined. And then now, as a V-shaped recovery, we have gone back to 2020. I'm referring to passenger vehicle sales. When this recovery happened, the number of cars sold at the entry level, like for example, if you take Maruti, the entry level is Alto, right? Alto or Swift. This has started, say probably they sold something like 1.5 million units. It went down to as low as 1 million unit, and then now recovered back to 1.5 million unit. But if you look at SUV sales in India, which is above 1.5 liter engines, the growth has been 20% CAGR right from 2019 to 2022. These have become almost 3 times the size of number of SUVs sold in India. So what it speaks about is, the consumption is happening, but it is happening more urban. Why? Because in the urban centers, we have IT sector creating job, we have salary income continuously happening, and this is supporting the urban consumption story, while the rural consumption story is more very volatile and depends on monsoon. So our investment philosophy is focus on the urban consumption and invest into companies which are very profitable and make use of this particular scenario that is emerging. What we like here, we like companies in the retail space. We like companies in the QSR space. I'll give you one data just to show the opportunity size. I don't know whether people on the back will be able to see this. Number of KFC stores in India is roughly around 500, and the number of KFC store in China is 8,000. And the kind of opportunity that is there in front of such QSRs is huge. And number of Zara stores, I think you people will be able to relate to Zara in the retail space. Number of stores in India is just 21. And the number of stores in China is around 600. And in 2006, when China hit per capita income of $2,000, the number of Zara stores were just 7. From 7, it went up to 100 times. And even if we are not getting Zara as an opportunity, we played Trent, a company called Trent, which is a brand owner of Westside. People who are visiting India would have seen this shop, Westside. So, which is very similar to a Zara model. That company, when we bought, had just 100 stores. Today, they have almost 300 stores. Not just that, the company went up. So when we bought for Westside, but the cash flows of the company was so good that the company created a new brand called Zudio. And Zudio alone is now 400 stores. I'll come to within the sectors how we select stocks, briefly touch upon it, but that is a very important point because the themes are there is a growth opportunity, but if you want to play the theme, you also have to invest in companies which can invest into those themes and grow faster. This is our favorite area, and I think 2-3 things are happening in the India manufacturing story, and probably a story which was very difficult for us to believe also initially. But we have played some stocks here and made money. But if you look at India's manufacturing story, it's not been very consistent. It's been very volatile. And pre-COVID, almost 3 years, I think, during the period when we introduced GST, demonetization, India's manufacturing was flat. It was not growing at all, actually speaking. But what is turning now and why the growth is happening? One is those reforms are starting to help us. That is first point. But second is, I think as I told in the initial part of the commentary, that world is looking for a sort of counterbalance. And India also knows that if they don't address the import issue right now, then a lot of the commodities which we are importing today can eventually become like an oil problem. Any of you know how much of mobile electronics India imports or electronics India imports right now? $70 billion. And this number was not even $20 billion 6 years back. It's been growing at such a speed. And it is expected the $70 billion will become $150 billion in next 5-year time period. If $150 billion of import is required, that is like another oil for us. And it is going to burden us. So the government knows this and they want to start manufacturing in India. So they have come out with the PLI scheme. There are PLI scheme for various projects, but the one which are interesting to us is the schemes which are relating to electronics, chemicals and engineered goods. In electronics, I'll just give a brief math and it can address your issue in the question mark on dollar also. Today, as I said, $70 billion is imported and we also manufacture around $50 billion. Total consumption of electronics in India is $120 billion. Government has given incentive to manufacture in India $300 billion. Initially, it will start with assembling, but slowly and steadily we will start manufacturing some of the components. Obviously, today we are manufacturing just 25%. I think we will reach something like 75%. What this helps you is, there is a swing that will happen from import to export by almost $100 billion in the next 5 years. A place where we have been importing $70 billion, a sector, we will end up exporting net almost like $100 billion. So if all this happens, and there is a lot of activity, I think you would have heard enough about Apple making an announcement that 25% of Apple's sourcing will happen from India in the next 5 years, and Apple is something like $200 billion. So Apple alone can support $30-40 billion of what we are talking about. And if Samsung also blinks the eye, today Samsung is heavily invested in Vietnam, but Samsung also blinks the eye, then you have, these numbers are not too far away from what we are thinking about. So we feel that some of this policy initiative taken by the government and the global supply chain crisis is leading to a stable manufacturing growth supported by mainly 2 sectors. One is electronics and another is specialty chemical. In specialty chemical, I think already the story is running. These are companies where what we call as Navin Fluorine, SRF, PI, which are manufacturers of specialty chemicals. Chemical is a very volatile business. So as a house, we have avoided it, basic chemicals. But when it comes to specialty chemical, what is the advantage India has? India, like in IT, in specialty chemicals, can offer R&D, low-cost R&D, along with low-cost manufacturing. That is why in textiles and all we face competition from say countries like Bangladesh or even from Sri Lanka. But when it comes to specialty chemicals, I think the competition was much lesser. So most of these companies, like for example, I'll give you example of Navin Fluorine or SRF. Okay, I'll take SRF because we made 10 times return on SRF after we invested. SRF, when I bought, used to annually spend around 1,000 crore capex. Today, SRF is spending every year 2,500 crore capex. And 1,000 crore capex, they used to spend on specialty chemical 500 crore and 500 crore on packaging films, which is a very volatile business. Today, SRF spends out of 2,500 crore, 2,000 crore only in specialty chemicals. And specialty chemical is a high ROC business. If you go to SRF's balance sheet and look at the ROC growth of SRF, from when we bought, SRF used to do an ROC of around 15%. Today, they have crossed almost 22% ROC. So this, at the end of, as I conclude this session, I'll talk about the themes that we said, right? But within the theme, how do you select the companies? I think there, it's the most important part of our investment process comes through. Obviously, the opportunity is huge. But we want a management which is committed for growth. We don't want a management which is giving us a dividend. Actually, we don't invest in companies which are paying dividend, unless the dividend is just an offshoot of it. The primary money should be getting into the company because the opportunity is huge. Second, the company should be making a lot of money in the existing business and it should not be a working capital intensive business. So we don't invest in companies where the working capital is above 100 days. And within the peers, they should be the best of the lot. And it works well for manufacturing, it works well for inventory, even for retail companies. So any company that you pick, in my opinion, the judgment of quality lies how they manage the working capital and the capital efficiency. So there we pay a lot of attention. The growth is given, but I think selecting the right stocks within the space is where we spend a lot of time. And that is the filtration process that we follow in the Sundar Maltran space. So with this, I'll stop. So we have a point on chemical space. I just talked about chemical space, right? So you can see the maximum return has been created by India in the chemical space in the last 5 years. This is the data of McKinsey and how much it has grown. And you talked about India's manufacturing capability. This is a comparison of some of the cost of manufacturing across 3 important categories. The labor cost, manpower, and so I talked about India compared to Vietnam. Vietnam is probably offering many of this which India is offering, but what Vietnam is not able to offer is the manpower required for the growth, for meeting the world's demand. So I think that way India's story looks well established in the manufacturing space. So I'll stop here. Thanks. If you have any questions, we can take it.
Now it's your time to ask questions relating to investments. Please raise your hands and you will pass on the mic. No questions, everything is clear. I can see at the back, Nandan. Mr. Nandan sir has raised a hand. Dharma, at the back. Extremely at the back. Mr. Nandan, in the pink t-shirt. Last row, last person. And in the middle also I can see one hand. That's your first question.
Hi. Thank you very much for your presentation. I got 2 questions. One is you are a mutual fund and every mutual fund talks about SIPs. Why none of the mutual funds have come up with the mutual fund which will work on value averaging rather than SIP? That's
Sir,
number 1.
if you can talk a little louder, I'm not able to hear.
Shall I repeat?
Sir,
Yeah.
a little loud, your voice is not coming, Nandan sir. A little loud, please.
Yeah, now is it audible?
100%.
Yeah. So my question was like the mutual fund industry like India, which is a huge industry and you're one of the big players. You always talk about SIP, But none of the mutual fund people talk about investing on the basis of value averaging principle, where it is proven that value averaging can give probably 1% or 2 more. So any comments on that?
I think I'm from the alternate side. Mutual fund, you want to comment, Ramesh?
No problem, I'll pass on you the mic here. Sir, पीछे देखिएगा. Yeah.
Hello, can you hear me?
Yes, sir.
I'm a bit rusty in terms of value averaging. I just want to understand whether you and I are on the same page. What exactly do you mean by value averaging here? I'm just making an attempt to answer your question. I'm not from the industry, but I've spent better part of my career there.
No, it's a separate principle, it's like SIP, but when you do the value averaging, you don't contribute the same amount every month.
Correct.
But you ensure that your portfolio value is of multiples of whatever your contribution on a monthly basis.
Correct.
And I mean, in the West, I've seen lots of research paper where they have proven that the return could be 1 or 2% higher than the normal SIP way.
I think value averaging was done by Benchmark Mutual Fund, which was into ETFs. This was, I think, way back in 2002. Okay. The closest we're getting to value averaging, as per your definition, is some of them have started some pseudo value averaging platforms where when the market dips, you invest a lot more than what your conventional amount is. That is actually present. Almost all mutual funds will give you that. I'm very happy to find out and revert to you. But I think if you're talking about the second part of it, it's actually there. The first part of it, which is actually called value averaging, I don't think any mutual fund is doing it anymore, but it's a good input. I can pass it on to my colleagues in the industry.
Okay. Sorry, just a follow-up question on other things. I mean, I just saw your brochure and I see a lot of your top holdings into the chemical sector, which is, yes, I mean, most of the chemical companies are doing well. And I know that the chemical industry will grow. But do you think that our chemical industry and, I mean, any 1 or 2 players like what you call Fluoro or PI or SRF or even Tata Chemical, do you think these industries can become as big as Dow Chemicals?
Okay, so obviously, I think same thing happened in IT sector. I don't think any of our Infosys or TCS ever going to become an Oracle or a sort of gigantic companies, because that are cutting edge technology. I think US drives the technology, but they depend on India for outsourcing. Obviously, there is a Salesforce sort of software that is there, but a lot of it is getting implemented by the Indian companies. So when I talk about our chemical companies, where we find interest is obviously the global giants, like in agrochemical, if you take the top 5 global players like Bayer or BASF, these guys will continue to drive the technology side. But average how much of money is spent for getting one agrochemical out? It is 1,500 crores of getting one agrochemical, and it takes 5 years. And it is very, very difficult to innovate in the agrochemical space. So, but when they start with one agrochemical sort of an innovation process, they do something like 20 synthesis. Synthesis means sub-components of before we arrive at the final molecule. If you do those all synthesis sitting in Europe, it is extremely costly. So we have Indian companies who can do some of the components of the synthesis before a final product is arrived. And that is the role Naveen or SRF or PI is playing for the global chemical companies. And they get projects at a lab level, and once the project succeeds, then they get the kilo level sort of a project. These products will be sold in kilos, I think. So they get a good ROC in all these projects. So I think India, you should not try to play on the technology side, you should play on the outsourcing side, but don't play the basic chemicals, because there the competition is little more higher. And that is the segment. The segment of outsourcing with the value add is where you have to play the specialty chemicals. And these companies' balance sheets are becoming bigger. So they have potential to a large extent what IT companies have done in the chemical space.
Thank you. Ramakrishnan sir?
If I can just add on a lighter note to what Madan is talking about, you actually make your money not when the company grows big. But when the company is growing bigger, I don't think you would want to invest in an Infosys or TCS today
Yeah.
when it is this size, right? But you wouldn't have minded investing 10 years ago when the size was this.
No, classic example for this is LIC. When LIC IPO happened, a lot of people called me and said, LIC, this is the largest company in insurance space. But if you look at 5 years, it has not grown. It is not about the size to make money in investments, right? It is about where the growth from here. That is what going to drive our returns. So size does matter, but if the size is not properly used, then I think returns are not made. That's a classic case with many of the large PSU institutions.
So size matters, timing also matters. Ramakrishnan sir, please go ahead.
Thank you for your presentation. I had a quick question on the taxation on AIF, capital gains. But I understand that the capital gains on the AIF is on the trust,
Yes.
and not on the individual hands. Because there are doubts, because people say that could be contested. As of now, it is not contested. So I'm not sure whether it has been contested and what is the status on capital gains on an AIF.
See,
On the investor, sorry.
so obviously the tax is paid at the time when I exit a stock, and the NAV given to the investor is after adjusted for the tax. The point that you are raising is there could be a contention at the trust level whether it is a long-term capital gain or it is a business income. But we have not seen any question mark being raised so far on that space. But clearly, if you are investing in Cat 3, the taxation is at the trust level, depending upon whether it is a long-term or short-term, the point of sale.
So the funds received by the investor is not taxed on his hands.
Yeah.
Yeah? Okay. Thanks.
Thank you. The last question of this session, please go ahead, sir.
Yeah, hello. You spoke about defense and railways as two specific themes, which clearly I subscribe to. But the question is that while our PSUs have dramatically unleashed the value that was possibly suppressed in the earlier governments, the only risk that happens is that what if Modi is not there? Or what if the current governance standards? So that raises the equity risk that because when you value these companies, you can't value it from government to government. So what is your perspective?
What you said, what changes you said that I could not understand?
I'm just saying the governance of the PSUs is what has changed the valuations of, like we saw, PSU banks.
Yeah.
Similarly, most of the themes in railways and in defense are PSUs. That's where the dominant portion is. Now, the question is on a long-term basis, where there is a big question mark amongst the foreign investors as well, whether the current governance standards with which Modi government is living,
you're
is that
changing
sustainable?
okay.
And does that reduce the valuation on a go-forward basis?
Sure.
So if these are the two themes, what is your perspective on investing in these themes where government plays a dominant role?
So very fair question, and it's very important. I think the theme is fine. At the end of the day, we have to make money. So there is a statement which Warren Buffett says, right? We should never make a bad investment out of a good business. So this is something which we need to be very careful about. So what is happening in that space is, what we have seen with the government is they have been very clear on, given the constraint in the fiscal space, they are spending money in specific spaces. Like they started with the road ministry, and we have constructed some of the best roads, and you can see that if you're across India, there is some of the best expressways which have come, and the government has completed with that in most of the cases. So from here, I don't think a larger allocation might happen to roads. What they are doing right now is railways, and they are now in railways. There are multiple projects which are being announced, and obviously with the momentum, these stocks have gone up. You have to keep two things in mind. So we can play either the company which will execute the project or a company which will supply components to the project. Always we find companies which are supplying components to the product are players to play, rather than the guy who is executing the project. Because project is a low ROC business. If I am supplying a component to that company, then there is a possibility. Even there the valuations are stretched, but we find one or two ideas which are interesting. You have to be very, very specific.
Can you give examples in these two sectors?
See, we talked about this manufacturing story, right? We used to play with one company called Dixon Technology, but now that stock is very costly, so I would also ask you to be cautious about it. But if you take any factory which comes anywhere, whether a robo is there or not, Whether a robo is there or not, there will be a genset, right? Every facility has a genset. So we play this through a stock called Cummins, which is a genset manufacturer, global manufacturer. They have operations in India also. So this is one idea we can talk about. There are another ideas also, but I think looking at components and the specific component suppliers is better way to play the story rather than project guy itself in this space.
I'll just give you a guiding principle which has worked out, just to supplement Madan. You talked about defense in PSU, and this is data. Every time there's a global crisis which happens, okay, and the world is coming out of a global crisis, the next 18 to 24 months, there's a lot of value buying which happens. Money rushes in, and you'll find stocks like PSUs, all the stocks which are probably not conventionally quality stocks, they start rising with the momentum. But the next 6 to 7 years after that, till the time the next global crisis happens, there's a huge polarization towards quality. My argument is, if some of these companies evolve and move towards becoming conventional quality like companies which is being viewed by the market, maybe they will get the valuation they deserve. But otherwise, just on the basis of, so I'm just going beyond the political thing which you were mentioning about, the governance thing. I'm saying it will happen. Every time there's a global crisis, markets come out of it, you will find PSUs doing well, you'll find everything doing well. One just has to be mindful that this is not a long-term trend till the time the companies themselves evolve. So.
Thank you. A round of applause for Mr. Madan. I love the way Mr. Vikas pitched in to address the queries. Thank you very much. Thanks a lot. I'll request our chairman, our ex-com member Dharma, to join me in sharing a token of love and appreciation on behalf of all of us to Mr. Madan Gopal. Mr. Dharma. Can I request James Matthew, our past chairman, to join us on the stage for the token of love? I'm sorry, I had the name, but I missed. Please come, sir. Sorry, I interrupted you, sir, for your questions. You can continue with Mr. Madan one-on-one so that we can stick to the time. That's why I have to cut you down. Thank you. Moving on to our next session, how many of us love simplicity? हाथ तो उठा सकते हैं. How many of us love simplicity? Everyone loves simplicity because I always say simplicity is the ultimate sophistication. And Tally is coming up with Tally Prime 3.0, which they call Simplicity Ka Baap. And to explain more, I will invite Hardik Pandya of Tally. He is not Hardik Pandya, he is Hardik Pandya of Tally, Mr. Yusuf Merchant on the stage to let us know more about this simplicity, what Tally Prime 3.0 belongs for Chartered Accountant. Please put your hands together for Yusuf Merchant.
Yeah. First of all, I'd like to thank you, Jai sir, for giving a quick introduction. I like to introduce, as it was an International CA Day, I like to congratulate each and everyone for International CA Day. Each and every one of you are very important for us. So as Tally, introducing Tally Prime 3.0, the new avatar of simplicity. This is nothing but, as Tally, the agenda of Tally is power of simplicity. We make life simpler for CAs and for SMEs. So I like to play a small video and then I'll show you a lot of things on that as well. This video is not playing. Okay, I think there's some technical glitch. So it's a power of simplicity. It gives you filter and report. It gives you report where you can filter, and it gives you voucher numbering, which simplifies it more. So if you're using Tally Prime, it's free update for you. You can update and get the latest release of Tally Prime 3.0. Further to add, as most of you might be aware, Tally as a company, we've got more than 85,000 customers in this part of the region, and all customers are different. Each and every customer is different. So it's a single solution which can fit each and every SMEs. So as today we have got gathered here, and one of our today's event theme is that real estate. So we have a specific module for real estate. So I'll just take you through a couple of slides that how we have developed that module. And if you have further to that, if you have question, we are right there to show you more. So if you are a real estate company, if you're looking forward to have Tally on board, so we already have a solution ready. While creating a masters, you can create it with the country, Emirates, building, floor, salesman, and things like that. So after this, once you have created your master, it will give you tenant and landlord detail. You can add all your tenant and landlord detail as well. So it will give you everything at one go. And it will give you, as I've started my session with power of simplicity, it will give you simplified report with a click of button. It will give you vacant report, it will give you outstanding report, it will give you collection report, it will give you tenant detail, it will give you group wise detail. So once you do couple of entry, it will give you all the report at one go. So if you see outstanding report, it will show you based on when the contract was started, when the contract is getting ended. When you wanted to see a collection report, what money has to be collected from which project, from which building, via salesman, you can put filters and get it done. Above that, if you wanted to find out, say, if I am a customer, how much is the outstanding from my side, you can find out those outstanding report as well. So above that, if you wanted to find exactly tenant-wise what is his P&L, you wanted to find out his lease renewal. If you wanted to store certain documents in Tally, you can store documents, you can do everything. So if you wanted to find management, for example, you are leasing one building where you're giving it to corporate, you wanted to find out what is your profitability, what are your expenses, everything will get accumulated and you'll find the same report. So I have got two reports. I've got some report. I've got connected some screenshot over here. If you find out tenant-wise report, it will give you when is the contract getting expire, when you have to get it renewed, and what was the salesman who has done it. Likewise, it will give you survey report, what all expenses you have got, what all other details you have added. It will show you that as well. Tenancy check. This is a very important report when it comes to check. You receive a PDC check and you store. Say, for example, which check is coming when, what is the check which is hitting which of your bank account. You'll get all the report which is showing on your right. Apart from that, it is giving you profitability building wise. You can put a lot of cost center and find out. So this is some glance I have shown it to you. It's about Tally. It's already been built in the product. If you further to this, if you have any questions, my team is sitting next to the registration desk. You can ask your question if you have query. If you want us to show you a demo, we can show you. Once again, I like to thank ICI team to give this opportunity to speak about Tally. Thank you, everyone.
Thank you, Yusuf. That was lovely. If you are looking for real estate, yes, it's one area of investment which we'll learn now, how exactly we can invest in real estate and earn returns. So that will help. Tally can, as a module, help you to track it if you are interested. How many of you heard about this proverb? If you heard about this proverb, please say yes. So at least I understand that we have heard about this proverb. Don't put all the eggs in one basket. Perfect. That is what the thing is. Please do not put all your money in one avenue. And that is the reason we thought about why only investments into mutual fund alternate. We should have something more. And that is why our next session is on real estate. Diversify, we as chartered accountants understand, and that is what we will do. Because as Indian CA, we understand that risk more. It's not India, it's Indian CA understands risk more, and we want to look for new areas of investment. But what can be that area of investment? Be it India, be it UAE, or be it Cyprus? I don't know. I leave it to the next speaker to tell us where should we invest our money if we want to invest in real estate. Before inviting Ankur Agarwal on the stage, I will request our ever energetic CA Asna to introduce our next speaker, CA Ankur Agarwal. A round of applause for Asna, please.
The pride of the prefix I hold is what made me a chartered accountant. Wishing all my fellow members a happy Chartered Accountants Day and good evening. Roti, kapda or makan. Have you all heard this? But today, the definition of makan is not limited to the necessity of life. People have various ways of identifying makan. Some people want to live there. Some people want to earn interest out of it. Some people want to earn rental income out of it. So, which is the best place to invest now? Who else would have been a better person than one amongst us, a chartered accountant, Mr. Ankur Agarwal? Let me introduce him to you. He started his career like a normal chartered accountant would do, a trusted advisor, a consultant, audit accounting. But he was a visionary entrepreneur, a relentless innovator. He started Bricks and Wood and devoted his efforts to the development of Al Marjan Island in Russell Khema as well. And his focus is bringing future vision to life. So without taking much of your time, let me welcome CA Ankur Agarwal.
A very good evening to all. My name is Ankur Agarwal, and likewise you, I am also a member of this prestigious institute, the Institute of Chartered Accountants of India. And I would like to thank Dubai chapter for giving me opportunity to share my views on real estate, which I have learned during this year after coming to Dubai. So likewise you, a lot of you must have started your career with the traditional practice, which I did in India. And the destiny took me to Dubai for doing the real estate business. And believe me, guys, this is the best thing which could have happened to me in my entire life. I have did a lot of things in real estate, which I will share you through my presentation. I will guide you through so many things which I have learned by seeing a real estate from a different perspective. Starting from zero capital with the AUM of 11.4 billion dirhams in a span of 2.5 years only, this is my journey. Real estate, if we will talk about real estate, what comes into our mind? Only houses, commercial buildings, rental returns, return on capital. There are so many things. But could you imagine if somebody can make 100% of their capital through real estate? So I will guide you through the process, how you can make your money and how you can take advantage of the current scenario which is happening in UAE, which a lot of people must have seen as a bubble which can be burst anytime. But I will guide you through the process that this is not a bubble, and this is a pretty mature market wherein really you can invest your money. As I have learned from our previous speakers that we should invest in the economy which is growing, which hasn't grown yet, which hasn't developed yet. So Dubai is an economy which is growing. And if we are really wise, we can take advantage of that. And I will guide you how we can take advantage of that. Investment opportunities in UAE real estate. We all know that UAE consists of 7 Emirates. Abu Dhabi is the biggest one. But why Dubai gets all the glamour? Why people loves to invest in Dubai? Why not Abu Dhabi? What is happening in Russell Khema? So today I will talk about only 3 Emirates because of time constraint. So I have chosen Abu Dhabi, Dubai and Russell Khema as my subject topic for the UAE real estate market. As you all know that, established in 1971, UAE consists of 7 emirates. So what is happening in 2023? In 2023, UAE has predicted the largest spending budget in its entire history of 50 years, which is 290 billion dirhams. And it is amazed to see that the budget has drastically increased just after the COVID. Why it is so? Where this money come from? Why United Arab Emirates is so aggressive in spending? So where this money come from? So we will learn that as well today. So this is the economic key indicators of 2022, which will make you understand that how this country is growing. So the GDP of UAE in 2022 was 503 billion US dollars. So this figure, since we are talking about India for last 1.5 hours, so this figure seems to be very unjustified. But if you will talk about the size of United Arab Emirates, it is actually very big. Indian economy is somewhere around $3 trillion. And we are 1.5 billion people. Population of United Arab Emirates is only 10 million. And that too consists of 89% of the expats. Only 11%. So GDP of 503 billion is quite a big number. In the entire MENA region, Arab world, UAE is the country which attracts the most FDI numbers. It is ranked the highest, which is somewhere around 23.7 billion US dollars. And very interesting fact, UAE attracts 15.46 million visitors despite having population of only 10 million. So 1.5 number of tourists than the entire population in the year. Why it is so? Why it is so charming? We will talk about more economic key indicators. The GDP is 7.6% last year, wherein the 70% of the revenue comes from non-oil sector. This is again very interesting. Most of the people think that oil economy is quite a big in this region, but 70% of UAE revenue comes out of non-oil sectors. The top country for the entrepreneurs in the entire MENA region, DXB Airport. DXB Airport is the busiest airport in the world for the 8 consecutive years. This is a remarkable achievement. It's not easy. You must have understood that. How many people can use the facility of DXB Airport? So I will talk about that number as well. Because see, why I am telling you all these things is just because to make you understand that why Dubai is so charming and why this bubble will not burst. Why there will be more money coming into this country. DP World Airport is the 4th largest international port operators. What is the impact of Expo 2020? It has created 27,000 jobs. And what UAE is doing, they are working on 4 civilian nuclear reactors which shall meet the 25% of their energy requirements by 2025. This is what they are doing. What UAE offers to their investors? What is the most important thing? The most important thing in UAE is the political and economic stability, where the corruption rate is almost zero. Reported corruption rate is almost zero. This is the biggest problem in our country. We all know that. What our investors are getting, if we are talking about the Indian investors, since the AED is pegged to the USD, we all will be getting all the time US dollars returns. US dollars is declining, our Indian rupee is declining 7 to 8% every year. So whatever you will get, whatever returns you will be expecting, you will be getting that return for sure. That is because it is just because AED is pegged to the USD. So we have geographical advantages. I came to know from somewhere that 95% of the world's population can reach UAE in 8 hours. This is quite interesting. 95% of the world population. So UAE is enjoying their advantages of geographical location. European, British people, even Americans nowadays, we will talk about that later. But everybody is happy here just because the geographical location is very nice. Wherever they want to go, they can use this platform. Talking about infrastructure, no need to say. World's best infrastructure we are having in Dubai, UAE. I'm sorry, I'm using a word a lot of Dubai, but it's UAE, I mean to say that. So, we are having the world best infrastructure. Can you tell me any city in the world who has the better infrastructure than UAE? No. No, it is a fact. It seems surprising, but it is a fact. The infrastructure is the best in the world. But the prices are still 1/6 of the world's developed cities' prices. Still. Why it is so? It is just because the economy is still growing and people are showing their confidence into it. The journey is very long and there is a way to go. If you will see this thing in this way, you will be able to understand that one day they will have to achieve that destination. So they are working on their infrastructure. Every day we are seeing a new skyscrapers. You will be surprised to see that Dubai holds a world record for the most number of skyscrapers in the world. Of course, favorable business environment. There is no scope of litigation or a very less scope of litigation, which we all know that how it goes in India. But in UAE, we are always enjoys a favorable business environment wherein there is very less government interference into our business. So these are the renowned personality who have invested in UAE. No need to say the names. Everybody has chosen their second home as UAE. Can you name me any other city in the world who has most number of celebrities as their second house? No. Only Dubai. And these are Shah Rukh Khan, Roger Federer, Tom Cruise, Brad Pitt, Mukesh Ambani. So this is again, see, this does not create it in a single day. This does not happen in a single day. This is a very long story. These people have shown their interest that yes, Dubai is the place where we should be. The Palm Jumeirah prices has risen up just because Shah Rukh Khan has bought a villa there. You know it very well. You must have heard about that. Mukesh Ambani has bought the most expensive villa in Palm Jumeirah. So why they have chosen only Palm Jumeirah, only Dubai? Not NYC, not London, not Hong Kong. Why? Only Dubai. So there is a reason behind it. So talking about the 3 Emirates which I have discussed in my session, that we will start with Abu Dhabi. Abu Dhabi is the largest of 7 Emirates consisting of 200 islands. So I would like to tell you a very interesting fact about Abu Dhabi. If you will compare the Dubai real estate market with the Abu Dhabi real estate market, it is like only 5% of the Dubai real estate market. Why it is so? We all know that Abu Dhabi is the most richest Emirates in United Arab Emirates in the country. But why people did not choose Abu Dhabi to be their investment playground? Abu Dhabi is a city wherein most of the investments comes from the local Emirates only, local Emirati people only. The sale and purchase transaction of Abu Dhabi mostly consist of the local people transaction only. But the things are getting changed. Even in Abu Dhabi, people have started their investments. People are choosing Abu Dhabi, then Dubai, to be their investment playground. So what has happened last year, that the total number of transaction was 5,472. This is the quarter 1 2023 figure, and the sale value was 27 billion dirhams. It is shown that the quarter 1 has seen an increase of 268% of the transaction as compared to quarter 1 2022. 268% increase. Where this money is coming from, guys? Where this money is coming from? 75% of the transaction comes from non-residents. So what does it mean? It means that Abu Dhabi is on the rise. Abu Dhabi is also on the rise. Abu Dhabi has attracted 1,769 new investors in quarter 2021. What Abu Dhabi offers to us, what is the vision of Abu Dhabi? Of course, sustainable and value-added integrated economy. GDP volatility, they want to reduce the GDP volatility, enlargement of enterprise base, enhanced productivity, new attraction. They are always coming up with the new attraction, like Yes Golf, Collection Views, Lamar Residences, and lot of things. You know about Sadia, Thailand? You know about Sadia, Thailand? You must be surprised to know that the second best development in the world was the Sadia Island in Sadia 2 in Saudi Arabia, after the Neom city. It was the most expensive development, second most expensive development in the world. And Abu Dhabi is coming up with the exact replica of that. I don't know about the numbers, but it will be very huge, very big. So you can imagine how much money they are going to invest in this particular island. It was the Abu Dhabi 2022 sales record. Yas Island was AED 4.2 billion, Reem Island 3.4 billion, and Sadia Thailand 3.1 billion. These numbers are very less. Why I am showing you this number is just because you must have seen the quarter 1 figure, which is 27 billion. And this was the last year number, 2022. So there is a very huge drastic change. Why I am telling you all this? Because smart people are coming up and making money. We have to come out of our conservative thoughts that it will go like that, it will burst in 2 years, 3 years. No. Believe me, guys, what I have learned, what I have experienced is that if you will lose the train, you will never pick up the train. Ras Al Khaimah. So all people have seen Ras Al Khaimah is like a village. We all go to Ras Al Khaimah just to enjoy and holidays and like that kind of thing. But the things are getting changed in Ras Al Khaimah. Ras Al Khaimah government has learned from their Emirates that what they need to be done. So they have implemented everything which is required to attract the new tourist. And if you will see the number of tourists in Ras Al Khaimah is actually getting higher than the number of tourists in Dubai. There are so many things which are good in Ras Al Khaimah. Why I am telling you all these things is just because I want to change your perspective towards these Emirates. We will talk about Dubai We will talk about Dubai in our session. But Ras Al Khaimah is also doing so many things. Ras Al Khaimah is coming up with the first casino in the Middle East. Why the famous Win, the Steve Wynn has chosen Ras Al Khaimah to be their destination? Why not Dubai? Why not Abu Dhabi? Who has given the blessings to Ras Al Khaimah to open the first casino in this country? It is almost a sin. You know that very well, right? But they have adopted that. So practically they are doing everything. The demographics are changing in Ras Al Khaimah. Their economics improving. Accessibility is, although it is very excellent, but what they are doing, they are investing 100 million US dollars to renovate their airport. So you will see a lot of flights from a different part of the world coming to the Ras Al Khaimah. And they are offering a very low airport taxes as compared to DXB to attract more traffic to their airport. So what will happen? So if people will land in Ras Al Khaimah, they will definitely gonna spend in Ras Al Khaimah, and they will see the opportunities there. So they are attracting more people. Not even a single Emirate is spending that much amount in their airport. 100 million US dollars. It's actually a very big number. So what is their vision? Their vision is to attract 3 million visitors annually by 2030. This number is very less, actually. I have sourced this number from a very reliable source, but this number is very less. I'll tell you at the end of my session why this number is very less. The number will be more than 10 million in Ras Al Khaimah. Annual number of visitors. They are transforming their industry to a sustainable driver of the UAE economy. Their main vision is to attract more and more tourists. So likewise, Dubai has started in their initial days by attracting more tourism into their country. And what eventually has happened, that the tourism has converted into the investment. You must have seen a lot of people coming to Dubai as a tourist, then they like the country, then they want to live here. And eventually they did investment here. And then they thought that, okay, let's do some business here. The story is almost same in most of the people cases. People are coming up here just to enjoy, just to relax. And then they choose Dubai or United Arab Emirates as their second home. So they are coming up with all of their money. So Ras Al Khaimah is also doing the same thing. So you will see a lot of things happening in Ras Al Khaimah in next 5 years, where it is quite a possibility that the number of tourists will be in Ras Al Khaimah will be more than the number of tourists in Dubai. So Ras Al Khaimah can also be a very good destination for the investment. Don't even think about only Dubai and Abu Dhabi. You can make your money in Ras Al Khaimah as well. So now I will talk about my home, Dubai. A city driven to excel, where the population comes from 89% expats. 89% people are expats here. Only 11% are locals. With an annual traffic of 29.1 million in 2022, Dubai International Airport is the world's busiest airport for 8 consecutive years. 80% of the Fortune 500 companies have chosen Dubai as their regional headquarters. Dubai boasts an extremely diverse population with over 200 nationalities residing in the city. Can any one of you tell me how many countries are in the world? How many nationalities are in the world? No, it is more than 200 actually. So almost every national is living in Dubai. Almost every national. This is again an achievement wherein you will not find any other city in the world wherein practically every nationality in the world you will see here. I will reiterate the word of His Highness Sheikh Mohammed bin Rashid Al Maktoum, the Prime Minister of United Arab Emirates and ruler of Dubai. Dubai will never settle for anything less than first place. And we all believe that, sorry, they actually mean it. They have proven that this city will never settle for anything less than number one. Dubai vision for 2040 is slightly different from Ras Al Khaimah and Abu Dhabi. Their vision is based on three things, which is sustainability, technology, and community. The concept of tolerance comes from Dubai only. We must have seen a lot of changes just because of the word tolerance, which has actually been accepted by this emirate. They are working to enhance their population by 2040. 5 new urban centers they will be building. UAE is committed to double the size of their green and recreational areas. Dubai is committed to 25% of their transportation as autonomous, driverless. They will be building a solar park which will produce 5,000 megawatts of electricity by 2030. And this is very interesting. 1.7 billion square feet of area will be dedicated to new industrial and economic activities. I'm sure you must not have seen a lot of industrial park in Dubai. You must have seen a lot of industrial park in Ras Al Khaimah or outside Dubai. But they are coming up with a plan of 2030 where they have dedicated 1.7 billion square feet of area to new industrial park. So investment opportunity comes from here as well. Dubai will generate 75% of its energy from clean resources by 2040. So they are following the path of Netherlands. Okay. Now we will talk about numbers. During last 6 months, Dubai has managed to get 180 billion dirham transaction of sale and purchase. So you can imagine almost 8 billion dirham has been collected as land department duty. 8 billion, come on. Out of 61,000 transactions. So the blue and green figures you have seen here, you are seeing here, is the existing properties and the off-plan sales. So these are the projects which are sold on the same day. Same day. Mirage, Dubai Properties, Emaar, villa projects and other apartment projects. So practically what is happening here is they are launching the project and people are standing in the queues just to get one unit. This is crazy stuff. You must have seen in India that when the government is launching the affordable housing, people are putting up their checks of all the family people just to get one unit because they know that eventually they will make money. So they are getting the apartment which is less than the market price, almost 50% less than the market price. So this is exactly happening in Dubai now. Some developers has proven that they don't need to sell anything. Emaar has proven in their recent 2 launches. People are actually buying something which they don't know where this project is coming. They don't even know the location of the project. It is somewhere in the Dubai land, somewhere. You cannot even see the demarcation of the land there, and you are putting up your money. You can see the trust, what is happening here. Because they believe that the money will be grown. It is for sure. This is population prediction of Dubai by 2030, what will be happening. So right now we are standing somewhere around 3.5, 3.6 million. and they are expecting it to be 4.8 million. So now this is very interesting. I'm going to tell you something which is happening. Why I was telling you that this is not a bubble. Dubai is actually growing very fast in terms of population. Before 2 years, we were not used of traffic in Dubai. Now the scenario has entirely changed. A handful of Russians has changed the entire demographics of this country. And it is just a beginning. Believe me guys, it is just a beginning. You will be seeing more and more people coming to Dubai this year. So if new people are coming up here, and if they are ready for the investment, where this project will come from? What is the supply analysis of Dubai? Are they ready for the demand which they're going to generate? Are they ready? The answer is no. The answer is no. If you will talk about a particular project to come into existence, practically it will take 4 to 5 years. But the planned project in Dubai, the project which they are coming up with consists of only 87,000 units. If I will consider the fact that every single developer will deliver what they have promised of their investors, only 87,000 new units will be coming up in 5 years. So Dubai government is working on enhancing the population by giving them lucrative schemes like golden visa and even passports and so many kind of things. But they are not ready with their supply. You will be surprised to understand that although there are more than 3,000 developers in Dubai, but out of that only 75 developers are active. Out of 3,000, I can name them. Only 75 developers. The investment does not come from residents only. We often think that, okay, how many residents are increasing? How many Emirates ID we are issuing? So eventually they will be our new investor. But this is not a fact. The fact is that the investment comes from non-resident more than the residents. People does not want to take Emirates ID or their resident visa here. They just want to invest through some structure, through UBOs, through different kind of modes. They want to invest, but they don't want to take they are not happy to take the resident visa. So we cannot understand how many non-residents will be coming up in Dubai and choosing the Dubai real estate investment as their mode of investment. So this is a very interesting fact. If you guys must have understood that, how many people will be coming up in Dubai? I think more than 1 million in next 2 years. More than 1 million people are coming, and we are not ready. This is the supply analysis of Dubai in upcoming 5 years. 87,943 units will be coming, to be precise. This is the exact number. And Dubai is kind of a market which is pretty much organized. You will not be getting any inventory which is unorganized. If you are not registered to Dubai Municipality and Dubai Land Department or RERA, there is no existence. So this is the database from Dubai Land Department itself. Only 87,943 units are coming up. There is a deficit of, if I will talk, like I have taken a number of 4.9 number of people who will be requiring a 1 unit in Dubai. It is almost 5. Practically you take it as a 4.1, but I took it as 4.9. The additional requirement as per the population, which shall be increasing, I am just taking the resident. Try to understand my point. I am only taking the resident numbers. we shall be requiring almost 250,000 units in next 5 years. 51,000 units every year we shall be requiring. So there is a shortage of 167,000 units in next 5 years. This is for sure which shall be happening until and unless we see another COVID or anything which is unprecedented, which we not have predicted before, right? That will attract more people, exactly. So whatever has happening in the world, it will attract the investment in UAE. We have seen an effect of Russia and Ukraine war in UAE. Russians are coming up with practically everything. I have seen Russians who are talking to invest in number Bs, not Ms. They are talking about Bs, billions. And they are actually doing it. And you will be surprised to understand that now these people are not investing in apartments. They are very wise people. They have forgotten the traditional path of investing in villas, apartments, and commercial units. They are investing in land parcels. They want to become a developer because they have understood the mathematics of development in Dubai. I will explain you, I will guide you through the process of development, how these people, so okay, if somebody can tell me how it is possible that a developer is coming up with 2 projects every month, Damak, Ivar, Sobha, Nakhil, Azizi, every month they are coming up with 2 new buildings. How it is possible? Where this money is coming from? How they are sure that they will be making money? What is the surety that took them to take such aggressive decision? It's a fact. It's a fact. But how much money they are making? No, I mean to say how much money. Like they are actually practically doing the 3x of their money. That's why they are so aggressive. So from this analysis, you must have understood that what will be happening in UAE or in Dubai in next 5 years. I have only 10 minutes. So whatever time I will be taking extra, that is my profit. So this is an analysis wherein if you have $1 million in your pocket, what you will be getting? You will be getting 1130 square feet of space in Dubai, wherein you will be getting 183 square feet in Monaco. And you will pretty much aware that the infrastructure of Dubai is far more better than the infrastructure of Monaco or Hong Kong. So why this kind of discrimination is happening to Dubai? So the answer is Dubai is still in a growing stage. People think that Dubai market is not mature market. Still, people could not forget what they have lost in 2008. But believe me guys, what I have learned, I can assure you that the things are actually changed. It's not that kind of a market. It's a pretty mature market. And you will see one day will come when the prices of Dubai will be better than the prices of London. Because they are investing in infrastructure. Developed economies are not investing in their infrastructure. Their things are already done. So the topic which has been given to me today is the investment opportunities. So I came up with 4 different investment opportunities which I have learned in my career, in my short span of real estate career. Being a developer, I will not talk about investment in apartments or villas. This is not my style of working, honestly speaking. I will actually tell you how you will make money in real estate. I will give you a different perception of seeing a real estate industry. Actually, what is happening, the developers are making money from your money. This gentleman is absolutely correct. So why you are allowing those people to make money out of your money? And how they are actually doing it? I will tell you the reason. So the supply, which I have predicted, almost 88,000, only 75 developers will be supplying those projects. Only 75 developers. This is a registered DLD data. So out of the population of 3.6 million people in Dubai, only 75 developers are active. Only 75. So you can be the 76th. This is the developer model of an off-plan sale which I have created through my experience. So if you will see the land prices, so I have taken the different jurisdictional area of Dubai Marina, Downtown, Healthcare City, Business Bay, RAC, JVC, Furjan. So these are the land prices. It is the approximate land prices of per square feet. So Dubai land prices are calculated on GFA, the gross floor allocation. Dubai land prices can never be calculated on actual plot size. The prices can be calculated on the area which you can sell actually. It is the maximum number of area which you can sell. So this area is called GFA. And how it is calculated? It is calculated by multiplying the FAR or FSI with the size of the plot. So for example, if your plot size is 100,000 square feet and your FAR is 4, so it means that you can sell maximum up to 400,000 square feet of area. Right? So this is the land prices per square feet on GFA. Okay? And this is the average construction cost, 800 dirham. I am talking about only Marina now. Okay? So total price comes to 1,250. That is the project cost actually. So in the construction cost, I have taken everything practically. Thus your selling expenses, your marketing expenses, your transportation, your unprecedented cost, your everything. Right? So I have taken everything. And this data derives from the reports of very senior consultants in Dubai. So I have done a few projects, development projects through which I have learned these figures, right? So how much money practically you need? You will not be requiring the full money of your construction value. You understand my point? You will be requiring only 40%. Practically it is 30 to 50%, but I have taken as a 40%. In some cases it is 30%, in some cases it is 50%. So I have taken it as a 40%. So you have to have 40% of your construction cost in your pocket for being a developer. You will have to put your money into the escrow account with RERA just to get the off-plan approvals. Right? So your cash flow will be the 40% of your construction cost and your land cost. And selling prices, if you will see the selling prices, you will fairly believe that these prices are actually very less I have taken. If I'll talk about 4-year prices from here in an off-plan sale wherein you will be getting a very lucrative payment plan, the Dubai Marina prices will be more than 4,000. I have taken it as 2,700 on this day. Downtown prices, I have taken it 3,500. Which is again, I'm doing injustice to the price, but just to make you understand what exactly you can make. Right? So your profit on 3-year tenure will be 1,450 per square feet. This is the profit which you will be getting in 3 years. So your annualized profit comes out to 62%. This is the profit which developers are actually making. You must have seen a lot of developers launching the project in the best of the Dubai's location with 4,000 dirhams, 5,000 dirhams per square feet. I have seen a developer who is asking about 12,000 dirhams with some branded car. I hope you understand that. Come on, man, 12,000. Are you crazy? The construction cost will remain same. You cannot just burn your money in construction cost. It is not possible. Even if you will hire Zaha Hadid as your consultant, your construction cost will not cross 1,000 dirhams. The best of consultant in the world. And land prices. So the question arises here, why these land prices are so much controlled? I was expecting a question from you guys that why these land prices are controlled. The answer is 90% of this Emirates land is being holded by the government itself, Dubai Holdings. So they have put a cap on the land prices. So if you are the owner of a land prices and you are expecting 1,000 dirham per square feet of your price of your land, Dubai Holding will give you a better offer. So eventually the market shall be corrected. The market shall be corrected, right? So if somebody holds 90% of the land, they will not allow the land prices to be increased just like that only. And they are doing this just because they want construction here. They want people here to come and make money. So this is the real mathematics of a developer model, right? I think the time is very less, so I will go very fast now. So second model is being a JV partner. So if you are not having the money in your pocket to purchase a land, you can be a JV partner with anyone who is holding land. So how it goes like that, I will skip that slide. Okay. So land investor has invested 45 million in the land and 75 million, the total profit comes out to 660 million. I am taking it as a roughly idea on a 3 lakh square feet GFA area. So how the market of joint venture goes like, normally you will be getting a 20 to 25% built up area as a land consideration. You will not be getting any money. So how it goes, if you are a landowner and you are not able to sell your land, so you will join hands with someone who has the money to construct that project, right? And then you will be getting a certain percentage which is calculated at 20 to 25% of the entire built up area as your consideration for the land. So in that case also you will be making 3 times of your money. So you don't need to sell your land just like that only. If you don't have money for the construction, you can join hands with anyone, with any facilitator, like Bricks and Woods. Okay, so third model is underwriting model. So I will explain you the anatomy of the payment plan. So how the off-plan market goes like that, you have to make 10% payment now, 10% after 6 months, and 30% on handover, 30% post-handover. So it actually varies depending upon the project. But if you have connection with a developer, an esteemed developer like EMAR, for example, if you have connection with EMAR, if you will, I'm just taking the name of EMAR, but eventually they will not do it, but I'm just taking it as example. So you will go to them and you will ask them, okay, I will take complete of your inventory. I will be giving only 10%. So I will reserve that units, right? I will reserve that unit. So how it goes like that, for example, you have reserved 160 units, right? By paying 16 million. I've just taken a rough example for you. You will be getting a bulk discount of 5%. See, if you are taking the entire unit, they will be giving you the discount. But you shall not be selling that project with discount in the market because market has already accepted that project. You are very much aware that this project will be sold in next couple of hours, right? You will be getting a commission, which I took at 6%, and you will be paying commission to the brokers. There is an organized broker infrastructure of Dubai, which comprises of 14,000 registered broker. They will sell your project like that in one day or a couple of hours only. So you are making almost 6% of the entire deal size, and your investment was only 10%. So you will be making 60% eventually on the next day. People having money in their pocket are actually doing it. Please believe me. They are actually doing it. You must have seen that the project has been sold in one day. How it is getting sold in one day? It is just because the people having money in their pockets are underwriting those projects. And then they are selling it to the people. And then they are making money. So my next investment opportunity is my favorite, where I have invested whatever I have earned. So this is a project which is called Al Marjan. It is in the Emirate of Ras Al Khaimah. It is a reclaimed land of 27 million square feet, wherein they managed to get the famous win, a win-win for Ras Al Khaimah. So the design has already been approved by the municipality, RAC municipality. If any one of you has a doubt on that whether the casino will be coming or not, I would like to clear you that it is actually happening because I have seen the site from my eyes. They are actually doing very fast in comparison of other developers in the entire island. So you can now imagine that if a casino is coming in the Middle East, what does it mean? You must have seen the history of Macau, where the casino, the win came. And in this part of the world, where actually managing the money is very easy, what will happen? What will happen? The market will go like crazy. And what they have did, they have chosen a place which is actually very small to accommodate the number of anticipated investors, anticipated visitors. So they are anticipating, the win is anticipating, they have submitted in their report to New York Stock Exchange that they are anticipating 5 million players every year. 5 million players they will be anticipating. And the number of keys which the entire Marjan authority is anticipating is 12,000. They cannot increase the piece of land because it is a reclaimed land. So what will happen? People will go like crazy. I will give you one example which I have applied and from where I got the maximum profit. The standard market was 600 dirham per square feet in Marjan Island. I have launched a project which is called Oceano. You must have seen a lot of hoardings on the Sheikh Zayed Road. We launched the project for 3,000 dirham per square feet. People were telling us that you are crazy people. 3,000 dirham in Ras Al Khaimah? And you will not believe me, at this point of time, I am 52% sold. 3,000 dirham. So eventually, what I have anticipated that Marjan prices will go up to 10,000 dirham per square feet because of scarcity of inventory again. So my humble suggestion to you guys is that you should look into that investment opportunity. Otherwise, you will lose the train again from the Russians. We were the number one investor for 8 years. And this year, we've skipped that position. Right? So this is my, so a lot of brands are coming up there, Address, Rove, W, Fendi, Bentley, Hayat, you will Novu, you will name the project, Rixos, Babel Bahar, Doubletree by Hilton, Hampton, Radisson. You will name the project and you will find it on the Al Marjan Island. JW Marriott, Bulgari, St. Regis, everybody is coming there. Everybody is coming there. I met a people from the very high management in the Marriott, and they told me that now the entire Marriott unit is working on Marjan Island only, because practically they have decided to come up with their every possible brand of Marriott. So these people are actually making money just because they reacted earlier. So we put our step in Marjan wherein nobody was believing that the casino will be coming. But now, that was a gamble at that time, but not now. But still, you have chance. If you really want to make your money, so you should choose Marjan. This is my suggestion. And thanks for joining me. If you have any questions, please let me know.
Thank you, Ankur. That was really great. Now, as Indians, we know we have to invest our money in India for stocks, and for real estate, it's UAE where you can put in money. So go ahead, talk to them. If you want to invest money in real estate, you have Sundaram if you want to invest the money in stocks, ETFs, and other alternative investments. Can I invite Chairman and our ExCom member Ashna, along with Sir Ram Baksani? Sir Ram Baksani? Okay. And Nimish sir, please, as past chairman, please join us for felicitating Ankur with a token of love, because he told us where to invest in UAE. If you have ample money, UAE real estate is for you. A round of applause for Ankur, please. What an energetic performance. Before we go further, we have reached the last session, but before that, I want all the speakers to come on the stage for a group picture. All the speakers of the day, I request you, along with my ExCom team, the entire ExCom team managing committee, please come up on the stage for a group picture. Everyone, Ankur, please come up back on the stage. We need it for a group picture. Sundaram team, please come for the picture. Mr. Binod, please come for the picture. The entire ExCom team, a group picture is left before we go for the last session. Okay, we have reached the last session. Before I tell you about the last session, a few important informations. We found one lost parking ticket. Please look for your parking ticket. If you are not able to find parking ticket, I have one lost parking ticket to give. I don't know who it belongs to. I can see the hand. Thank you. I will give it to you, sir. Don't worry. I saw Srinivas. Don't raise any other hands. Only I have one ticket, so please do not raise it. Second thing is about presentations. I will request all my speakers to please share the presentations with us so that we can share to our members. That's a request we will do to them. If we receive the presentations, we will share that with all of you. The last information. The last information is about feedbacks. We will again circulate after the session feedback forms to you. We request you to fill in the feedback forms so that we can understand what exactly we want to do in going forward. Thank you. Now, finally, the last session, and this one talks about investment also, but invest in yourself. All other investments are secondary. The most important investment is investment in self. That is what we do while we were growing up as a child. We invested ourselves for 20 to 24 years before we started getting returns on our investments done on ourselves. But as said, investments have to be done regularly. Similarly, investment in self has to be done like a SIP, systematic investment plan. Every month, invest in yourself sometime. And to know more about how to invest in yourself, to reach from CA to a leader, from clerk to C-suite, we have our own CA friend, Binod Shankar, to tell us. But before inviting him on the stage, let me invite our ExCom member, the hardworking, the diligent, and always ready to own responsibility, CA Sanjay Gagrani on the stage to introduce CA Binod Shankar. A big round of applause for our ExCom member, Sanjay Gagrani. आप इससे ज़्यादा अच्छा कर सकते हैं. Please come.
Good evening, members. Happy CA Day. So after hearing the remarkable story about India and UAE, it's time to shift the gear. Ladies and gentlemen, distinguished guests, and my esteemed colleagues, it's an absolute pleasure to introduce our keynote speaker for today's event with a remarkable blend of experience, expertise, and charisma. Our speaker is a true powerhouse in the field of business, finance, and personal development. CA Binod Shankar started his career with a bank in India before moving to Dubai and Oman while working with KPMG, Anderson, and EY. Binod also joined Nakheel as a manager and rapidly became finance director. His last corporate position was the executive director, finance at a listed GCC asset manager. And in 2009, Binod left successful career to co-found a new company, Genesis, which was later acquired by Kaplan US. These days, Binod's main focus is an executive coach for senior executive, where he helps them move into the C-suite. He's a market analyst. You will always see him sometimes, frequently on Bloomberg and CNBC, and is a platform speaker who has spoken at several high-profile events. He recently launched his books, Let's Get Real, 42 Tips for Stuck Manager. Now, listen carefully. He has summited 13 mountains across Europe, Africa, Nepal, and India, cycled from Manali to Leh, Pune to Goa, and completed 5 half marathon and 2 full marathon. CA Binod is also CFA charter holder. Yeah, please. CF Binod is also CFA charter holder and has obtained the level 7 qualification in coaching and mentoring from UK. So without further ado, let's warmly welcome our esteemed keynote speaker, CA Binod Shankar.
I don't know why I always end up in the shift just before dinner. I'm always in between dinner and, so thank you so much for everyone for inviting me. And my name is Binod Shankar. I like to keep it interactive. So there will be questions. I know names. James, Nimish, Rajesh, Jayaprakash, Rachna. I'll call out names. So don't run away. Hari, please close the doors so that no one leaves the room. There will be a Q&A session towards the end, so feel free to ask me questions then. But let's keep it interactive in the meantime. So let me start off by asking everyone here, and please be honest. How many of you feel stuck in your careers right now? Please raise your hands. How many of you feel stuck in terms of opportunities not seized, to be seized? Indifference at work, what to do next? Anything? How many hands? I didn't see how many hands. Not my hand. So today's session is about from CA to leader, from clerk to C-suite. But actually it's about getting unstuck in your career. And I have been stuck a few times in my career. I'm going to share my stories with you. So the structure for today's presentation is in several parts. The first part is my journey and what I did during the journey, and maybe you can learn from that. The second part is about my favorite people in the world, chartered accountants, and how they can get better or what they should be better at. And the last part is how you can get better, specifically what are the tips I can give you on this. I'm not a motivational speaker. I specifically told Sanjay, don't introduce me as a motivational speaker. I'm a coach. And as a coach, I give practical advice. I don't give fluff. Okay, are we good? Yes? Let's start off. So the first is what? What was my journey? I think Sanjay already captured the journey. But like they say, a picture is worth 1,000 words, right? So this is my journey from articleship in 1989 to CA in 1992. People are looking at me and saying, my God, this guy's old. Right? Yes, I am. You have to guess my age though, right? Industrial banker, auditor, charter holder, switched to industry with Nakhil. In fact, I was standing here 18 years ago talking about Dubai real estate when I was with Nakhil. I think Nimish remembers, right? Executive director of finance with the Gulf Finance House. Quit corporate life at the age of, guess what age? No. What is the age when people get 40? Exactly. Yeah. People either buy a Porsche. I didn't buy a Porsche. I became an entrepreneur. Set up my company. 8 years later, the company was acquired by Kaplan, the US multinational. And since then, I've been executive coach, podcaster. I appear on CNBC and Bloomberg quite often, and an author as well. that's about me. I'm going to tell you what I think helped me in my journey. I'm going to divide it, everyone talks about 10 top things, 8 top things, right? I've got my 8 top things. It's 8 C's, okay? You don't remember all those things. Just remember some key points here. In fact, you can forget the entire presentation today except for one takeaway, whatever that takeaway is for you. That's all I ask, right? So how? The first thing that helped me a lot in my career was curiosity. And I'm looking at curiosity from the work side and the non-work side. So again, what was I curious about? So a lot of things I did, right? And you can see over here, right? There was accounting, there was auditing, there was financial analysis, teaching, mentoring, right? Entrepreneurship, TV appearances, podcasts, and blogging. And I always seized opportunities when they came along. I rarely said no. I think a lot of us tend to say no first thing, right? And that is one advantage that worked for me. On what is more interesting probably, on the non-career side is a lot of other things, right? Life, right? I call it life. I have done theater acting, okay? So I've actually, this is me acting in a Kalidas play called One Day in the Season of Rain. And I got a Best Actor award, so it wasn't bad. Okay. Yeah, acting's losses, finance's gain, maybe, right? I've done marathon running, as I mentioned to you. Dharmarajan here is actually from my running club. Can you please raise your hands? Right? We are fellow runners, right? We were fellow runners, right? I've done hiking, I've done mountaineering, cycling, like I mentioned, a lot of long distance cycling, scuba diving, which I hated. I will never do it again. Okay, some things you won't do again, right? Skiing, I won't do it again. I fell down embarrassingly in public quite a few times. I don't want to do it again. Skydiving, something I won't do again. Okay. So what do you think curiosity leads you to? What's the next step logically you think? You tell me. Let's make it interactive. Something new, what else? Sorry? Find an answer. Yes, good one. Harsh? More questions, but ultimately it leads you to what? It leads you to passion. And it leads you to competence. You know what you're good at, what you're brilliant at, what you suck at, right? What you're not good at, right? And that is very important. So I found I was very good at talking, communicating, stage, presenting, writing, right? Mountaineering. This is Kangyaksey 2 in Ladakh. Last year, July 2022, 6,240 meters above sea level. I look very confident, but I can hardly breathe. Right? There were 8 of us, all of us made to the top. Or cycling. This was at the end of the tour of Karnataka, 530 kilometers over 5 days, 4 days actually, back-to-back cycling. Right? So I've also found that I was good at communication, right? These are the CFA event in Bangalore in 2019. And what do you mean by communication? Communication means the ability to simplify, the ability to relate to the audience. Like I'm talking to you, James, right now. The ability to make things funny, interactive, the ability to be humble and yet be insightful, and also the ability to listen very carefully. Especially as a coach right now, listening becomes very important, right? So you have all this. So what your curiosity and competence and communication leads you to, or led me to, is clarity. Clarity, and this happened, and by the way, a lot of the time clarity happens when you go through shit in life. And my clarity also happened then, in my last job, when I had a jerk of a boss, which I'm sure all of us can relate to, right? How many of you have had jerk bosses? Raise your hands. Unless your boss is in the room, in which case, don't raise your hands. Not a good idea. Not a good idea. Okay? That's a career limiting move. Yeah. So I was sitting in my 34th floor corner office in Bahrain, 2009 April, well paid, nice title. 25-member team spread across MENA region, big listed company, stressed out, politics, corruption, right? You don't feel like going to work. And thinking, I'm going to turn 40 next month, right? I don't have any liabilities. By the way, I'm also single, just to make sure that you all know what my background is. No wife and kids, right? And next day morning, I gave my BlackBerry and access card back to the HR director. I said, I can't do it anymore. I just can't do it. And I was the only major hire they had made in the last year because it was crisis, remember? Property crisis 2008. And I started my company teaching because I had a passion for teaching and I loved the freedom of teaching. So that was a clarity. In fact, I've never had that clarity ever before in my life. And it sometimes takes a crisis in your life, right? Like a health crisis or a relationship crisis, like a divorce or getting fired from a job, for you to think about what is really important for you. Until then, I never thought about it, really. And ever since then, I've always thought about what's important for me when I do something. And it gives you confidence. Once you get clarity, you get a lot of confidence. This is me on top of Mount Kenya. It's 5,000 meters above sea level in December 2012. Believe me, it is me. I know you can't believe because you can't see my face, right? So it gives a lot of confidence because you know what your values are, right? You know what you stand for. You know what you don't like, what kind of people you'll work with, what people you will not work with, ever, even if they give you $1 million, right? And I have a PhD in quitting. Okay? Now, quitting is something, doesn't start with C. I know that, but I put it there anyway, okay, as one of the 8 C's. So, there's common saying. What is the common saying about quitting that you read about? What? Winners never quit, and what is the next one? Quitters never win. Winners never quit, quitters never win. That may be true in many situations. In my case, it was the other way around. Whenever I quit, I won. And I have quit in many things in life. Starting from my 20s, I quit studying for company secretaryship, CS. I quit studying for my CPA, US CPA, halfway. Then in corporate life, I quit industry. I joined Big Four. After some time, I quit Big Four, rejoined industry, Nakheel, in 2003. Then finally, I quit corporate completely. I started entrepreneurship in 2009. And then I quit entrepreneurship in 2018. I started coaching and podcasting. That's on the career side. On the adventure other side, I started running, Dharmarajan and all those people. I did all those marathons, quit running. I didn't like it, stopped it. Okay, one fine day, 10 years ago, no more running. Okay. So many things I have quit, and I have found out that a lot of us don't like to quit something. Is that right or no? So we have this sunk cost fallacy. Sunk cost means what? I have spent 10 years in the career, or 15 years. Let me finish another 15 years and retire. Although those 15 years are going to be hell. Thank you. James, are you experiencing that now? James can sort of talk about hell, right? We'll talk about that in more detail later. But we do that. Why do we do it? Because we are afraid of being seen as weak. It's almost immoral. Society supports the fighters, persistence, determination, continue doing something. But why would you continue doing something if it doesn't mean anything to you, right? So I never had that sunk cost fallacy, ever. Like, I don't like it, quit. Simple, right? Follow my passion, follow my ideals and values, right? So I would say winners should quit. But quit at the right time, for the right reasons, and quit to win. Don't quit to lose. So quitting and sitting at home watching Netflix is not what I'm talking about. Quitting for something better, better career, entrepreneurship, yes, right? So when you talk about curiosity, passion, competence, clarity, confidence, then you start getting committed, right? So when I left my corporate life, I said, the next thing I'm going to do, I'm going to stick to it because I'm passionate about it, and I'm very good at it. So this is 2010, the left side picture, and this is me in my Knowledge Village office in Dubai. I was the CEO of my company called Genesis. We were a CFA training company. That space you see was my office and classroom combined. And those people you see was my entire staff in 2010. The guy on my extreme right is Mohit Malhotra, my co-founder and my director who worked with me, also CFA charter holder. That was 2010. We were unknown, right? We were in a cubicle initially, small cubicle, with a dongle for internet. Remember those days? Right? That was those days in Knowledge Village. We didn't even have an office, right? No one knew us. 2017, February, me shaking hands with the CEO of Kaplan UK, Peter Ullion, okay, in a big deal where they acquired 100% of my company. Why did they acquire the company? Brand, culture, client list, right? And market dominance. We were dominating the market in CFA and financial training at that point. Why did that happen? Passion, commitment, competence. And we had a great team by that time, right? So commitment works on specific instances, right? And of course, something I always did, whether in corporate or in running or cycling or mountaineering, was to celebrate the wins. You must celebrate. I think a lot of us are too serious about life. Do you agree? Yes. Especially chartered accountants, man. My God, you know, there's no fun joke about chartered accountants, actually. Chartered accountants are seen as the most morose, dull, boring people, right? We don't need to be, right? We don't need to be. So I'll show you some pictures. So this is me with my CFA charter holder students at the charter award ceremony, with my team members at Genesis. And these guys on my left and right side are junior most team members, right? We were not, you know, not even 2 levels below. But the camaraderie, the culture was so strong, right? I don't know whether you can identify me here. Right? I'm the guy in the middle, okay, wearing the blood-stained, not blood, of course, fake blood, right? Halloween, the entire company was shut down for that day, except for essential calls by the receptionist, right? Fun, have fun. Work hard, work bloody hard, but also have fun while you're doing it, right? Parties after each CFA exam, which is twice a year, CFA award ceremony again, right? It is me, by the way, behind the mask. For some reason, I like wearing masks. Okay, I don't know why. This is last year at the top of Jebel Chase in Ras Al Khaimah, right? A winter hike. Christmas hike, obviously. That's why I was wearing Santa Claus costume, right? Yeah. So that is about me, right? Now, let me talk about chartered accountants, right? My fraternity, right? The reason I'm here, thanks for the invitation, right? So I'm going to talk about what holds chartered accountants back. And we're going to have a very frank conversation. I'm going to show certain images, no text. And you're going to tell me what that means. Are we good? Okay, right? Right, so this is all about chartered accountants, CAs, right? And this is the areas where they need to improve. These are gaps, just to give you some context. Yeah. Batao, what do you think this means? Calculate everything. I can't hear you. Calculated risk. Hari, you have not been active at all. You're the chapter chairman, man. You should speak up. Not enough. You need to talk. You need to reply to me. Jay Prakash. Numbers. Sorry? Not creative. No, we can be very creative with the numbers, by the way. Huh? Sorry? Lack of mental maths, okay. So I'll tell you what it means to me because I've seen enough chartered accountants, right? You have to, but you don't. James, fees, that's it. Very focused. I like James, extremely focused man. Clients, fees, that's it, nothing else, right? So I have worked with chartered accountants. I've hired them, I've trained them, I've mentored them, okay? And I see this common theme. They are focused on speed, not direction. Micro, not macro. Profits and cost, but not the people. Agreed? Yeah. Tactical stuff, but never the strategy. Right? I can go on and on. Yeah. So this is the training that we are given, and we have absorbed that as a part of our personality, which we don't need to, right? And this carries on to the career as well. That is the problem. It is good to be like that at work and going through IFRS and audit files, but not for your career, other things in life. What do you think this slide shows? Options, go on adding qualifications. So I was talking to a gentleman before I came on stage. I won't name him, but I will look at him vaguely. And the first thing he asked me is, what qualification should I do next? And we had a conversation. So we are very good at badge collection. I call it badge collection. How many of you here in this room remember the good old days of CA plus ICWA plus CS? Right. That has changed, by the way. Zamana badal gaya. Now it is CA plus CFA plus FRM and Kaya. So we have in our minds got this illusion or delusion or fantasy or whatever you call it, that as we keep acquiring qualifications, we will get better in our career and all those things. It doesn't happen that way. Beyond a certain age, they look for leadership skills, soft skills. You know that. Namesh, you know that. James, you know that, right? You're leading big organizations, right? So this is another problem we have that's holding us back. Why do you think people are obsessed with this? What is the reason? No, why do you think that people want to talk about CPA, FRM, CFA, Kaya? Sorry? Recognition? I'll tell you why. It's easy. It's easy, that's why, right? If I asked you, can you be a better listener, a better communicator, a better manager, you think it's going to be easy? No. Do you think any of you will go back after today and tell your wife, I listened to Binod today, and from tomorrow onwards, I'm a completely changed man? No, it's not going to happen. I would love it for it to happen. It's not going to happen. Okay? So we do these things because it is easy. Study, right? Grasp, recall, at the exam day, write down pages. Remember the pages we wrote for CA? And when you call for extra sheet of paper, genius, right? Yeah. CAs also have this fixed mindset. What do you understand by fixed mindset? Can someone give me a hint or clue? Rajesh in the back. Boundaries. Shreyas, what do you mean by fixed mindset? Ticking inside the box, not agile. Sorry? So what this means is you are fixed exactly. So the typical thinking is I shouldn't do anything new. Because if I do anything new, I might fail. And if I fail, it is humiliating. Right? Now, because culturally we are taught that failure is very humiliating, right? We come from a culture of shame. Let's admit it, right? Where failure is not, it's better these days, but it's still not admissible, right? To a large extent. So this is a problem, right? And we don't want to learn anything new. And there's one big problem with this fixed mindset, especially for leaders. If you're a leader, how do you think this fixed mindset will affect you? There's one major thing. You don't like, and one more thing. Innovation, change, all that is fine. You don't like feedback, right? I mean, I'll talk about that later. We don't like feedback. We all say we love feedback, you know, we are innovative, disruptive. Nonsense, right? I'll give you feedback to your face, you will never talk to me again. Most likely. Most likely, right? So we are hypocrites also in a certain fashion, right? That includes probably me as well, to be honest. Right? Now, you might be thinking, what is the connection between Kim Jong-un and chartered accountants? But please tell me, be creative. What do you think is the connection? We want to be praised. Very good. Very good. Anything else? We will do whatever you want. So let me ask you a question again. How many of you have told your boss or given your boss honest feedback? 2, 5, 7, 10 people in a room of 500. How many of your juniors have given you honest, direct feedback? 10 people in a room of 500. Oh yeah. So this is what we do, right? We rule from top down, hierarchy, right? Do what I say. Don't challenge me. Agreed? The rules are set. If you challenge me, please look for another job. Don't stay here. That's a career limiting move for you. I know what I'm doing. I am partner. I am CEO. I'm chairman of ICA Dubai chapter. For example. Kidding. Hari doesn't look like Kim Jong-un, but never know, right? Now, this is a very famous fundamental accounting assumption, right? Substance over, we all know that. So please don't tell me the accounting definition. I know that, you know that. Tell me how it relates to your career and how it adversely affects your career. Come on, guys, give it a shot. Don't be shy. No. Yes, please. We go after designations, yes. We go after designations too. Title, very important, right? So, to me, what substance over form means is we are too focused on the substance of everything, in work and outside work, right? How many times have you spoken to chartered accountants or you yourself thought, I don't need to wear a flashy suit. I don't need to be well groomed. I don't need to be on social media. I don't need to be on LinkedIn, yeah. I am so brilliant, right? Nimish is so brilliant. Shreyas is so brilliant. People will come to my door looking for me, right? I'm a All India number 17 rank holder. You know that, right? That whole cachet of All India rank holder, right? So I don't need to look for jobs. Employers will come to me, right? So this belief in substance is actually harming us. Perception is reality. Please understand that. People will not care to dig below the surface. They don't have the time, the ability, or the inclination. They will just look at what you are. That's it. Okay. Once upon a time, I used to come to CA Dubai chapter events. And the first row, people would come late. And they would come and sit here wearing t-shirt, jeans, and chappal. Okay. Fortunately, nobody is doing that today. That was the perception of chartered accountants. It's okay, yeah. I can wear whatever I want. Internally, I'm good. I'm IFRS compliant. Or whatever, gap compliant or whatever. It's a very stupid, dangerous assumption to make because people don't care about what you are inside. They only look at what you're outside. Optics are important. How you dress is important. How you speak is important. Grooming is important. My favorite. There are two phrases that dominate our culture. Okay? The first phrase is Khandan ki izzat. Right? You know what that means, Khandan ki izzat. We come from a culture of shame. So everything has to be, engineering, medicine, CA, right? IIT, IIM, right? Marriage, shadi, 2 kids on time. Okay? On time, the right company, brand is very important, right? Title very important. Where you live is very important. What you drive is also very important, right? Why? Because people are watching you. And we are very bothered about what people, yes, because for us, we are a very status-oriented society. Very status-oriented, right? And for us, status is conveyed through what? iPhone 15 or 14 or whatever, right? Yeah. Where you live, Meadows, James lives in Emirates Hills probably, somewhere like that, right? Buy villas. So that's what happens to us, right? Log kya kahenge? What is the problem with log kya kahenge? Let me ask you. What is the issue? So what? So what? Harsh? Doesn't allow us to take risks. What else? Sorry? Social pressure. Shreyas? You're brilliant. Your actions are defined by others, never by you. Okay? Exactly. Why did you get married? Mom and dad. Who did you get married to? Mom and dad. Which career you chose? Mom and dad. Which college you went to? Again, mom and dad. Where did you go for your job? Probably again guided by chacha, chachi, dada, dadi, mom and dad, right? What do you do at work? How colleagues, friends, how they see me, peer pressure, LinkedIn, Instagram, Facebook, right? So problem with Lokya Kahenge, which I was actually suffering from this disease till I turned 40. And I realized that, my God, I can't live like this for the rest of my life, right? Life is too short. So this is a problem with us, right? It is affecting everyone almost, I see. Bright, smart, educated people stuck in their jobs. They don't want to leave because what will people think if I leave? What if I fail in my venture? What if the new job doesn't work out? What if I go to Canada and, whatever happens to me in Canada? I don't know, right? So we've talked about the issues that chartered accountants have, right? The last part of the presentation is going to be about how do we rectify it? So I was telling Sanjay and Hari, I'm not a motivational speaker, right? What does a motivational speaker do, Rajesh? Yeah? So the motivational speaker will say what? All of you can climb mountains, right? James can climb Everest tomorrow. Nimish can climb K2 the day after. Heidi can climb the Himalayas 1 month later. I don't mean to compare you or anything. But it's bullshit, right? It's bullshit. Why is it bullshit? Because they don't tell you how. Yes, Bhaiya, but how do I climb? Right? I've got triple bellies and double chins. How am I going to make it to Everest? You say I can do it. How? So I'm going to tell you how. And you can contact me for details later because obviously we have a time shortage and Hari is looking at his watch and saying, Bhaiya, hurry on, we have dinner and all those things. People are hungry, don't stand talking for too long. So, again, this is from my own personal experience and coaching clients, right? And before I speak about that, I'm telling you how because when I talk to my clients, they pay me thousands of dollars not to hear me talk about how I climbed a mountain. They want to know how they can climb the mountain. So that's how I crack the code of how, right? We are the most easy person to fool, right? Ourselves, yeah? So the 5 steps I would tell you, the first step, values. What are your values? And there is a link. If you reach out to me, Hari can share my email address. I'll share my email address at the end. How to find your values, extremely important. What drives you? Why do you act in such a manner? What are your core beliefs? Does anyone know what your core beliefs and values are in this room? Please raise your hands if you do. Two people are like very tentative, like maybe I do. You don't. Actually, it drives everything you do, right? My core beliefs and values are authenticity, freedom, respect, meaningful work, yeah, and well-being. And I found that by doing the online test, and it was exactly right. Exactly right. So what happens if you do something which is not in line with your values? What happens? You become miserable. That's why you have all these people disengaged and miserable at work, right? Toxic workplaces, right? Why? You go into investment banking, you're not meant for investment banking, Bhaiya. You go into audit, audit is not the place for you, right? Things like that, but you don't realize that, right? Find your strengths, look at the goals, and very importantly, practice, practice, practice. This is not, some book you read or some seminar you attend, and then tomorrow you go home and, bus, tell your wife and kids, Binod, great event, but yeah. Get the right people around you. The best thing I had for me when I was running my company, where I undergo the transformation, I had an HR manager working for me, and she had the guts to tell me where I was screwing up. And I was a CEO. And I take off my hat to her every time I see her. Because she actually trusted me not to fire her when she came to me with bad news. You need to have people who are smart, bold, and care about you around you. Don't surround yourself with ass-kissers, which happens a lot of the time, by the way, if you're a leader. Yeah. This is if you take one thing from today, it is this concept of mental toughness. Very, very important. There's a book written on it, a lot of research on it. It is, mental toughness is about how you react to what happens to you and to things around you. I'll repeat myself. Mental toughness is how you react to what happens to you and to your surroundings. And it's extremely revealing. And it is all in your mind. See, in our world, we can easily see what? Behaviors and emotions, right? I'm walking around, I'm animated, you can see it. You cannot see someone's mental toughness, these 4 things which really drive you. This has been extensively validated over the last 20 years. It was started off by a gentleman called Dr. Peter Clough in the UK, who I am in contact with. And there's a test, there are diagnostics, there is a toolkit, everything is there. Let me explain these 4 elements to you quickly, right? Control, the extent to which you believe that your life is within your control. The extent to which you believe you're a victim of circumstance, that is control. Commitment, the extent to which you will deliver your promise. If you promise somebody, if you commit to something, you will deliver it. You will go over hurdles. That is the commitment score in that test. Challenge, the extent to which you see a particular situation as an opportunity or a challenge. During COVID, most of us did what? Wore masks, ran inside, closed doors and windows, right? That's fine. But some people saw opportunity during COVID, right? What did they do? They went and made the masks, as an example, right? They saw opportunity where we saw challenges. That's what you call by the challenge. And last but not the least, this one, confidence. What does confidence mean? Confidence means belief in your abilities, right? So you have interpersonal confidence and confidence in abilities, right? Which of these 4 do you think should be the first thing to work on, before you do work on any of the other 3? Is it control, commitment, challenge? Which of these things is the easiest to work on? Commitment. Who said confidence? It is confidence. Confidence drives everything else. Confidence drives everything else. Once you develop this confidence, you will be able to take on challenges. You'll be able to make or go through commitments. And you'll also believe that you have control, right? Mental toughness is connected to well-being, is connected to performance, is connected to behaviors. Please study that in more detail. Happy to send out more research to you if you contact me, right? Something else to work on, what I'm doing right now, public speaking. I think it is the number 1 fear of most people in the world, right? Year after year, isn't it? It is, public speaking, right? I've never had a fear because even when I was young, I used to appear in public and speak. Never had any issues with talking to strangers, telling them about my weaknesses and issues, right? Like I'm doing today. This will take you to a long place, long way. Not just speaking in public, writing in public, right? I've told many of my friends and colleagues and clients, please go on LinkedIn, open an account, have a profile, write stuff. People need to see you. You need to stand out. It is the best professional networking platform on the planet. Log kya kahenge? Right? Another issue as well, right? How do you develop this? Go to Toastmasters. Attend the meeting. There's so many chapters in the UAE. Attend meetings, practice. You'll get better at it, trust me. No one is born speaker, right? Personal brand. A personal brand is what people say about you once you leave the room, once you're not in the room, right? So once I leave the room, or when you're at your house, what you'll say about me is my personal brand. I don't know what you'll say about me, right? Or what Hari or Jay Prakash will talk about me. I have no idea. I hope you'll give me good feedback. Your personal brand is basically what distinguishes you from other people. It's your values, your competence, your passion, your confidence, your network, right? Extremely important. Most people I know, including chartered accountants, do not work on their personal brand. Do not. They're treated carelessly. It's really funny. How much money do you think companies spend on their brands? Billions? Hundreds of billions? So you see what I'm saying? They see it as important, but we don't spend anything on our branding, right? We wear what we want to wear, say what we want to say, remain invisible, right? Become inconsistent. That's actually harming us, right? So last year, I always had a personal brand. Last year, I went formal. I hired a company to help me draft personal branding guidelines. So this is my personal brand, the first page, brand visual identity guidelines. There's a logo, there's a tagline, there are colors, there are certain ways my name will be used, for example. Okay? You don't need to go to this extent. If you're a leader, probably. If you're not a leader, think about what I said earlier. Consistency, and that's the important thing. You have to be consistent in your branding, right? You can't talk about Bitcoin today and leadership tomorrow, right? So if Hari had asked me to come and speak about Bitcoin, I would have said sorry, right? Or Dubai real estate, I would have said sorry. I can speak about it. I don't want to speak about it, right? So they say that I was at an event today, and there was this big speaker talking about what does growth mean? What does growth mean, right? Two things, really. Direction and what's the other one? When you're driving a car, speed. Growth is either direction and or speed. You have speed. Most of us have speed. In fact, most of us have too much speed. Doing rubbish stuff which we shouldn't be doing. What we lack is direction, right? Do this, not this. Not now, later. Right? Think of this, not this. A coach, Alex Ferguson in this case, talking to Cristiano Ronaldo, is exactly doing the same thing. Ronaldo is talented, disciplined, but he needs to be told what to focus on. Big picture. Big picture. Right? That's what a coach does or a mentor does, right? The last slide. Now, this is not got anything to do with the how part, but I thought I should bring it up. How many of you in this room are above the age of 40? That's it. That's quite a lot of people. So this is what your life will look like. Okay? Almost everyone goes through this. Let me explain to you what this means. This is what you call the U bend or the U-shaped happiness curve. When you're in your 20s, early 20s, mid 20s, right? Life is fantastic, right? Isn't it? You believe that you will get the best education, the best jobs, right? The best wife or husband, the smartest kids, right? Yes, the best health. Agreed? What happens when you're in your 30s and 40s? Reality kicks in, right? That's why you see happiness going down. Reality. What happened to reality? What happens to reality? The husband wife is not as wow as you thought, right? Right? You can admit it because if your spouse is not here, it's fine. Okay? Right? Not right. Okay. That's fine. Okay. Maybe your wife is here. What happened? Career-wise, the promotions you expected didn't happen. The pay that you wanted did not materialize. You didn't get into IIM or IIT. Okay? You got something else. You didn't get All India rank for CA, for example. Right? Health-wise, you wanted to be Hrithik Roshan or John Abraham maybe at that age. You ended up being the Michelin man with 3 tires. Right? So that is disillusionment, right? So the worst time of your life, as per this research, is when you are between 40 and 50, apparently, most people. That's when you hit rock bottom. You realize that, you know what, this is not working anywhere. But the good news for you guys above 40, it gets better after 50. Acceptance. Acceptance. This is life. This is life. Okay? Okay? I'm not going to become, Rishi Sunak, Barack Obama, right? Mark Zuckerberg, Ratan Tata. No. Isn't it? I'm okay with this job, this title, maybe a little bit more further. No? James might go from BMW to Bentley, for example, from Meadows to Emirates Hills, for example. That is okay. I'm fine with it. I have accepted it. I have shed all my false delusions and assumptions and ambitions. I was not meant for that anyway. I wanted to be in Goldman Sachs. I don't want to be in Goldman Sachs. Those guys suck the life out of you. I wanted to be investment banker. No such ambitions. So this is the U-shaped bend. So don't get worried if you feel stuck, is my message to you. This is the natural, normal progression of life. I was stuck at 40, I escaped. 40 was my rock bottom. You know, it's like 10 years earlier than normal. And I escaped. Now that doesn't hit me anymore. But if it happens to you, seek guidance and don't feel depressed. It's normal, right? Last but not the least, I wrote a book in May, and all what I'm telling you pretty much captured in 42 simple tips for what I call the stuck manager, right? It's called Let's Get Real. And it came out quite well acclaimed. Some people in the room have already read the book, yeah? And I'm not here to sell the book. It's on Amazon, it's in Magrutis, Kinokuniya, in Dubai and Abu Dhabi. But what I've done is capture my experience in a brutally honest fashion, right? With tips on how you can get better and avoid the mistakes that I made. So you don't reinvent the wheel. Right? That was my whole idea. Don't reinvent the wheel. Life is too short to reinvent the wheel, right? Be efficient about it, right? And that's pretty much, I think, my spiel. That's my email address. Thank you. I'm on LinkedIn, and that's my website as well. Any questions? I know we are late, but quick questions we can take probably from the audience. Feel free.
I guess they are fulfilled. And
All hurry for dinner. Any questions? Come on. Nimish, anyone? James?
Okay, give a round of applause to Binod for
Sorry,
such
he has a question.
You
can't put me off stage yet.
Sorry.
You can't put me off stage.
I'm really sorry. I missed it. Can
fine.
we have the mic for the gentleman, please? Yes, please.
Yeah. I think the rest of the room also should hear it. Can you give him the mic, please? Thank you.
The graph which you just saw, I call it a midlife crisis.
Yes.
So how you personally, you said you have gone through that.
Yes.
How personally you have handled that crisis? If you can speak in next 1 minute only, I'll be very happy.
I don't need to. I've got
He already has that. Yeah.
Okay. I was good at teaching, part-time teaching for 10 years before I quit my corporate life. I'm single, no liabilities, no commitments. That explains everything. That doesn't require 1 minute. That's 3 words. I am single. Exactly. It got better. Life was already good, it got better. That's a very good way of putting it, by the way. Yeah? Any other questions? Sorry.
Any other questions from anyone in the room? The right time or the last time to raise the hands, otherwise.
I'll be available after this. You can grab my number, shoot me a WhatsApp message. Happy to reply to you. Right?
Perfect. Give a round of applause to Mr. Binod.
Thank you so much, guys.
Thanks a lot.
Thank you.
Can I have Chairman and Sanjay on the stage for felicitating Mr. Binod with a token of love, please? Some information in between. Jan, you will see if you are if you want looking for Jan food, please look on the left side. In the center, you will find veg 2 counters, 1 non-veg counter. So please, Jan is there, but on the left side. Please have a look around. Thank you. Yes, sir. Thank you for joining the session and hope we had added value to your learning today. I'll fail in my duties if we do not acknowledge our sponsors, and to acknowledge our sponsors and our speakers, I'll invite Malvika to give vote of thanks. Thank you.
I would like to extend a formal vote of thanks on behalf of the Managing Committee of ICAI Dubai Chapter to all our speakers. A special thanks to our sponsors, without whom events of such impactful magnitude is not possible. Thanks to our title sponsor, Bricks and Wood Real Estate, principal sponsor, MBG, Tally, IFCO, Lulu, AGMC, and Strokes and Ground. Platinum sponsor WMS, CloudSook, NUF Chartered Accountants, NALSoft, UHY James, ECAG, JEDOX, and SBC Tax Consulting. Banking partner Bank of Baroda, media partner Khalij Times, travel partner Uranus Travels, event partner Sundaram Alternate Assets Limited, FMCG partner Aktia, magazine partner Finance World, institutional partner Delhi Private School, and valuation partner Windmills. Also, a special thanks to all our members to be here on a weekend to boost our confidence and make this event a success. Have a wonderful evening, everybody. Thank you.